Good morning. It is May 5th, 2023. We're going to be streaming stocks, options, futures. That was loud. Looking at some technical analysis. Sub up, like up, comment down. Happy money sticks around. I'm going to get set up here and put the Yaz on. Pretty loud. Go. Okay. You guys see the filings that came out for barbecue? It's up like 8% pre-market. West is ripping. I don't know if there's news, I didn't check, but it's up 30%. All right. Morning trader, morning rally, morning cash. Oh geez, you have top losses. Guten Morgan. Morning Dennis. Bye, ripping here. It had the data came out this morning. It already gapped up pretty good, I think, from Apple's earnings. But then, yeah, data came out at 8:30 and continued to rally. Up 0.84%. That's crazy. Okay. We got about 8 minutes to open. Have a late start here. Morning, Hugh. Okay, take the future. Delante. SHF. Morning, Ace. Guys, for your likes. Got about 6 minutes to go. 4 likes. Whoa, barbecue. There's a 22% pre-market, potentially. I mean, it is. But pre-market on OTC is just very illiquid, so it jumps all over the place. But yeah, right now it's at 12.96. That was the last trade. Very easy. See where it opens. We've got 6 minutes. Yeah. Already on, Wayne. Okay. Back west, let's see, is there news on this? I don't think so. Might be a good or short for over the weekend. It's like nothing though compared to how much it dropped. Crazy. Meta Platforms Inc. hires Oslo-based AI network team that was previously at British chip startup. Okay. Oops. Apple's only up 2.8% though. Pretty big for Apple, but yeah, that is pretty big. What market stuff do we have going on? SVFD, that was the Zip Pump, Zip Trader Pump, Carvana, had earnings, Western Alliance, Carvana could get squeezy. Fubo's up 24. This was earnings also. From earnings, it's up 2.5. Barbecue's up. It's still up 22%. So we get to open. It doesn't drop down first. We're like right here, 12.96. COVID-19 is no longer a global health emergency. Yay! Yeah, barbecue's got a gap. Next gap up is 20 cents, and then 30 cents, and then 44 cents. Those ranges. After that, let's see. You've got a 60-cent gap and a $1 gap. And a $5.50 gap. It's $11 gap, 11.7, and 17.60, and then 22. I don't know if there's any gaps higher than that earlier, but gaps all the way up to 30. Morning, Mohammed. Oh yeah, still. Last trade was
the ego on you.
Just flexing your membership, huh, Kitty? Thanks for the like, though. Appreciate it. Running errands. We'll see. Yeah, we'll see what happens. Thank you guys for your likes. We're at 9 of them so far this morning. Not bad. Got about 30 seconds to open. Fly's way up here. I need to get some levels in. Eagle has landed. Yep, it could fill those gaps. It'll take some time. Next week, maybe we'll fill the next one up. I mean, could happen today, but not. I don't know. I'll probably be buying the dip today, just to have exposure over the weekend. And there's a new high on SPY. Whoa, that candle was crazy. Get some levels in here. There's your gap up on barbecue. Big ranges for the SPY. All the volatility, maybe we'll just kind of be a pretty mellow day. I don't know. Yesterday was really just a big consolidation day. Waiting on data this morning, which was pretty bullish, so I keep going. There it is. 0.95%. Breaking out to the upside. Barbecue's coming back down to where it closed at. We're up 8.5%, 1150. SPY is up a full 1% right now. Heavy bounce off of that. A double bottom there. The 410, I guess. Yeah, 410.37. Maybe looking for a short there for the weekend. Awesome Chinese stocks going. NBTX. This had news. Oh, they had earnings. Oh. Got past there.
Maybe we do the autosave.
Doc. BAOS is halted to the upside. Carvana. Squeezy Vana. 53% up. MacWest 32% up. Wall 35. These banks just had a gap up. Snap. Barbecue 7.5. I'd like it to hold this this 10 level. I might not have exposure over the weekend. Well, I might close out today on some if we break this level. Could be forming a head and shoulders. So far it's not. It's kind of holding a higher level. So higher lows, higher highs, which I like. That. Yeah, I mean, like a shoulder here. This shoulder's higher, so that's good. If we hold that level, I like that. Drops below there. You have one last little retracement on the fib level, which would put it like actually close to here. Yeah. Pro guarantee me to see would suck. This is an exception. This is an exception. For sure. This is not the rule. IP is going up. Yeah, they announced that they're gonna continue to still have their dividend, but haven't set an ex-divi date. Yeah, I mean you're getting it for like 2017 prices, really. Getting some buying in there. Not immediately filling that gap. We're on a 43%. SVFD pretty much flat. Barbecue 1187. 12%. Western Alliance still rallying 34%. Oh, Pac West is halted. Halted down? Ami? Owens and Minor? 17.5% on this one. Ubo and Carvana both kind of get out of control. SMX up 18. Barbecue moving up, it's up 15%. 14, 15, 12, 10 is the price. This is a level we have from pretty drawn in here. That high, low, low, low. I'm breaking through it right now. Crazy. Big Green Friday would be pretty cool. Morning Mog, morning Kitty. So there's some filings that came out on barbecue this morning, I think. We'll look over those once it settles down a bit. Barbecue 17.5%, 1245. I think it's holding above that level. We've got 1335. I have a next resistance. I haven't bought or sold anything yet this morning. Just kind of gapping and going so far. Carvana's halted. Whoa, halted down? It always rips and halts down. Pac West halted down. Says BAOS is halted up. A lot of halts this morning. He's here, time to moon. Still going. Barbecue at the high of the day. 15%. Yeah, I mean, we'll see. Like this is pretty solid. We might be breaking the high from yesterday. VWAP, kind of weird VWAP though. Why wouldn't VWAP open up down here? I wonder if that's because it's OTC and extended hours. And let me look, because it's not showing. Not showing VWAP that it opened at the where the stock did. Okay, so on E-Trade it's showing it right. Here's E-Trade. Opened up where the stock opened up, which makes sense. We're above VWAP right now. Wait, there. Now we will just updated. You just heard me talking about it, I think. Ah, it's still going. Oh, can't be red on a Friday. Go Barbacoa, go. $409.96. Yeah, the 410.37 I like for a short entry. JPEG. But that being said, I mean, this was a pretty significant double bottom. This might have further to go. See what happens up there, I guess. Some weird stuff up on my watch list. Dogs. EOGZ. 21%. Nirvana still halted. PacWest resume and still going. Upside 52%. Still in that gap. BBBYQ? I think you got that off. Little bit wrong. Still going 1.2. Woo. Barbecue up 15%. Come down a little bit. 1229. I know. New trader, what should you invest in today? Morning, Tasty. Nothing. If you're new, just watch, listen, do some research. Go slow. Take your time. Be patient. Open a paper account. SPY is just ripping. GME is not really getting it yet. Up a little bit, 1.3. This is kind of a resistance from before on GME. Wow. Ubo. Still going, 32%. Carvana's resumed and dropping. Oh, I have top gainers, that's why. Open Doors up 20%, Redfin's up 18%. I think these had earnings also. Op is getting a bounce, 25% on that one. Barbecue back up, 18%. 1.25 on the SPY, 410.30. I've gotta get a short on here. I don't know. Just thinking this is early morning pump. Okay, I'd grab a short up there. We'll see. Might be early, Might just be wrong. Breaks this level, like, and holds it. That'd be pretty crazy. Top is halted. BAOS is halted. This thing halted down. Barbecue land, we don't have to mess with halts. Almost up 20%. Nirvana dropping. Fubo slowing down. Coin's up 12%. They had earnings also. Let's see, make some big moves. Doesn't have to go. It's Friday. It's fine if it's chilling into Friday. It's not like there's options that are gonna cause some T+2 action or something. Nice sustained rally. If it doesn't like have a red day today, I think that'll be pretty good news. Basically, being on a Friday and that's already up like 130% this week. Yeah, and holding this 10-cent level. Buy a little red candle here. AOS resumed. Fubo, dude. Fubo's still going 35%. Barbecue coming down a little bit. So what we're seeing, I think, on barbecue, and I was thinking about it last night, why it's such natural and good price action and discovery, and why my trades are actually causing price action, and just being an OTC in general. There's not payment for order flow. There's no high frequency trading, and I'm pretty sure those aren't here, at least, and that's what we're seeing. This is the lack of payment for order flow. This is you actually trading in the stock market and not just some internalizing and them holding it and moving it how they want. That's what I think the lack of volume is too. I listened to William last night on PP's show, and he's all confused by lack of volume, but that's totally normal on OTC to have less volume. It doesn't mean people aren't buying. I think it's because there's not high frequency trading going on, and we don't have all these. The market makers aren't just trading it back and forth, and then the price action, I think, is from no payment for order flow. Show No, he's a smart trader. He's a smart trader. He actually makes money. I think. I mean, I don't know, but you can tell from his experience that he's developed the discipline to take profits and make money on stuff and not just buy and hold. Unless if you're trying to invest long term, that's totally different though. Ooh, well, 38%. So it has resistance up here at 1.6. Crazy when TA works out with the catalyst. We had that RSI divergence, and it started to play out, but then had to have earnings for it. 1% there on barbecue. I slowed down. We'll see though. It's not a quick sell-off from here at least. Ubo 41%. Nirvana came down quite a bit from its gap up. KOS pretty flat. Top halted down. Indoor 23%. Redfin 25%. Funko's even up 15. There's a hammer candle up there. See if it's followed by an engulfing candle. I mean, SPY's up 1 1/4. It's a huge move. So the filing whatever came out on barbecue this morning. I just looked at some of it. There's a lot going on there. There's a couple points that would make you think Brian Cohen is definitely still invested. This one that Bullion shared. It's like, it's kind of confusing, but SPY's coming down. I need to keep a look at this. Barbecue just hanging out around BWAP 15%. You mean OTC? I mean, they were able to get it to go to chapter 11. I want it to stay in here. I want barbecue to stay in here. Why gap up? You had earnings, Apple earnings, and then you had jobs day this morning. Or was it jobs? What was it? Yeah, employment rate, unemployment rate, hourly wages, all that stuff helped to rally the market. This is literally what Superstock's been trying to have in the NASDAQ and the normal stock exchange for years. It's just been sitting here and over the counter. Kind of hilarious. Top still halted down. Barbecue just chilling at VWAP. There is a gap there though, so wondering if that gets filled today. Gap that we left at 10.99. Thinking if I want to close now and then reopen for the weekend a little later if we fill this gap. I don't know. It's holding up alright. I mean, I'll just wait. Spy down to VWAP there. 1185, 1192. I'd just be dip buying this thing. Fubo 44%, dude. Yeah, but it's getting right up to that resistance. I think this is probably about where it slows down. 160. Yeah, this area. I think it has much room after this. I bounce on VWAP. BAOS trading again, 72%. Barbecue coming down a little bit. Back to actually just below open. At 1155, 9%. Buy consolidating still above VWAP. Otley group. Don't know anything about it. Bearish. But it is at the support, so see if it finds support. Alright, barbecue coming down. Filling this gap. Low of the day. 1133. Up 7%. Dip then rip. I mean, it is Friday. You have to have expectations on a Friday. SMX 13%. Fubo still 40. Okay, yeah, so the filing here, kind of funny. So bypassed recipients. I don't even know what this whole filing is about, actually. I haven't. Something with the bankruptcy, chapter 11. So notified, this is what, notified parties, I think. Notice by electronic transmission was sent to the following persons, entities by the bankruptcy noticing center. It only shows 6 in here. Maybe that's because these are the only ones that notified electronically. Assuming, because there's a lot more recipients, I believe. But then bypassed recipients, you have Ryan Cohen. But then there's no bypass reason. It's not undeliverable, duplicate, or out-of-date forwarding address. There's no number here. But for some reason he was bypassed. Because the following addresses were not sent this bankruptcy notice due to an undeliverable address, duplicate of an address above, duplicate of a preferred address, or out-of-date forwarding address to the USPS. What I don't understand though is you didn't give a reason. Their bypass reason is blank. So maybe that's out-of-date forwarding address because it's nothing? Or duplicate? I'm not sure. And okay, so actually another thing on there. Bye, moving up. No, don't do it. Yeah, I closed those shares I opened yesterday on barbecue. Jeez. I still have the ones in the other account, which we'll see. Bye. All right, I need to close that. Take the loss on that, maybe. See if it's a false break or not. I do like how it double bottomed. Looks like it might be double bottoming here at barbecue, so. Could be good. Yeah, barbecue moving back up a little bit. Bye, wicking. Wiki. But yeah, so on. You can see, I can't scroll on here. It says total of 6 that it sent. Oh, there it is. And then total, it says total 37. But then I think this 6 is just delivered electronically. But then for some reason, RC is bypassed in there. It doesn't give a reason. Carvana could get wild. Yeah, Carvana's dropped quite a bit. I think Fubo, like it's wanting to go. DraftKings up 17. They have earnings also. Bought a 10. You didn't have an option to buy a 10 today. That was only yesterday. You can feel some delay. Quit comparing it. There's always delay, trader. I'll check with E-Trade, make sure it's not delayed. No, it's not delayed. I mean, not compared to E-Trade. Being stubborn yesterday, I wanted to wait. I was saying that would be the low. I bought down here yesterday, Lords. I bought on this double bottom. I was a little late on the buy, bought on the kind of the rally, but yeah, I bought down here yesterday. That's what I just closed out actually. I don't think 08 will come. I'm hoping it doesn't. I said I'd close if we broke this support of 10. Because that would not be a good sign for me. But the fact that we're holding this is very good. This morning I was hoping to fill that gap, maybe retest it before we go, but it's not looking like that anymore. So, yeah, there you go, 19%. 1251 on barbecue. Yeah, I wasn't streaming. It was on the video. If you watch the video, I think it was on the video. Yeah, I actually bought during the video. Right here. Yesterday morning, pining away for 6 cents. Yesterday morning when we just ripped. Okay, you say so. Yeah, no, on the videos when I bought it because I was done streaming. So yeah, on the stream I didn't. That's true. I'm gonna consolidate up here. Don't do that. All right, I might cut losses here on the futures. Auto just gonna wick up there. Looks like it wants to keep going. Like it's probably gonna come back down here, but every one of those crazy days. All right, I cut those. Next level up. Oh, I mean, that's up 1.37%. Barbecue at the high of the day, 20%. Yeah, there's a gap down here. We gapped up this morning, so 10.99, there's a gap still. Hey Daniel, happy Friday. Let's get to barbecue. High of the day? Yeah, maybe. Yeah, we did just hit the high of the day, 1280. Oh, and there's a break. Oh, maybe not. BAOS halted still. Or again. Pac West holding the gains, 46%. Might be a little double top here on barbecue. Looking strong. Strong so far. Really just consolidating since the open. Big range. GME popping up 2%. It's popping on that breakout with SPY probably. SPY gets up higher, flattens out, then dump. Wee! Hey, X-ray. Jimmy's getting kind of poppy. SPY also getting kind of out of control. Dude, my GME calls don't move. Got the wrong ones. I got the wrong ones. Too much time, too far out of the money? I don't know. Trying to be safe with my expiration, but they're not moving. GME 3% there. This might be an up Friday for barbecue. Might not be a sell-off into Friday. Let's see, next week. Next week we're gonna come into SLD, the first week of it, which is unusual. Just Moaz, nice knowing all of you. There's 3.25% on GME. Okay. Looks like barbecue wants to break out. I mean, this is high of the day right here. Hanging out 21%. GME has some volume on that push too. Barbecue's been green all day. Maybe just your position's green. AMC is so hard to hold. Jeez, AMC down 2.5. Not getting any of this. We suck again, AMC. Yeah, I mean, you're getting Fubo, Carvana. I mean, we've seen Carvana move with GME. Or was it? Yeah, it was GME and Barbecue. Formerly known as BBBY. Hey, Al. 411. I just rippy rip. GME 3.5, 3.7. That's kind of exciting. Up to 20 bucks. Look at this trajectory. Crazy. I like the stock. Okay, 3.6. Barbecue kind of coming down a little bit, up 16%. Closing some more of my shares. I'll buy back in if it breaks out, but or if it get a retest in this 10. GME 3.7. Okay, all right. Almost 4% there on GME. Okay, GME. Four digits. I just hope I have exposure for it. I got too much time and too far out of the money. Really just too much time. Shorter dated options are probably doing better with this. Silvergate's up about 12%, ripping. What? Silvergate in a basket? Weird, all that volume push too right there. 4.8%. Yeah, I started buying once it showed signs of that reversal. This day and this day. That hammer candle and then RSI divergence that was completed 2 days ago. I didn't buy much though because I'm using a lot of capital for BBY, which I still think has, at this point in a shorter time frame, potential for a greater upside percentage, but it's definitely more risky. GME. I have to get some shorter dated stuff on this. Let's see, these options maybe haven't moved much yet. Like the worst time to buy options in the morning on a rip. So we've got May. I'd look at like maybe June. 42% today. GME up 4.3. Settling down a little bit. Weird, it's just waking up there. Might close these. Yeah, I'm gonna close my calls I have on GME. It was up not much, like 20% on them. And I'll look to buy some less time actually. Just try and cover this next OPEX. IV is still super low on GME. I actually might not wait. Okay. I got filled. Definitely buying into strength, but be weird if GME started running right now. Yeah, that's kind of just a starter, I suppose. I'll get more later. I closed my longer dated ones for September, and I just picked up some June 22s. It's not the best time to buy calls though, honestly, unless if this thing just keeps going today, which I don't know. So I'm getting exposure in case it does, but probably won't. Well, but it could today. I mean, this is pretty good volume in the morning. Might grab some more on a pullback to maybe to VWAP or just some consolidation somewhere. Probably be able to average down on it. BBBYQ still hanging out there, up 17.45%. The slippage on BBBYQ is kind of crazy. Because there's no payment for order flow. And this is what I like though. It's like it takes some time to get a fill. It's, you know, you got to get a buyer met if you're selling and seller met if you're buying, and at least that's what it feels like, and that's kind of my understanding. And so it's crazy how natural it is. GME's still going 4.5. I'm not gonna buy more into this strength, but pretty good. Pretty stinking good. The options premium really hasn't moved though. It's been many moons we've seen the options actually like really have a big move, even after earnings. Like, yeah, there's maybe some 1,000%ers, but that was it. 10:15. Thanks guys for your likes. We're at 21 likes. BY kind of flushing down here a little bit. Yep, Fubo is a nice consolidation after earnings. Same with Carvana. Redfin also, Open Door. So Silvergate is interesting to me. It almost looked like it was waking up with GME. Probably just coincidence. But like the volume, see the volume and all that right then at the same time? Not sure. GME still showing strong, almost 5%. Barbecue back below that 1215 level. It's at 1184, up 11.7%. Still a gap fill down there at 1099. GME, man, wow. So if it starts running now, I mean, we actually have a cycle, which we haven't seen. I mean, I don't know if I'd call this one. How long has it been? This was one. This was like our last one, that split one. It was a weak one, but I think it was. It even had the same double top formation. It's almost a year ago. Wow. GME's still going. New high of the day. I mean, maybe this will wake up BBY even. What's the SPY doing? Is it still mooning? Yeah, kind of. Just getting support of the SPY. But that being said, it's showing that strong relative strength that you want to see when GME rallies, like when it has big moves. These options haven't moved much. Not yet. I could keep buying into it since they really haven't moved. IV is 70% on them now. Over the last 3 years, though, that's historically very, very low still. Barbecue just kind of consolidating still. I mean, a close here today would be very good on barbecue. We don't have a sell-off into Friday. I don't want to see the gap fill first, but... Okay, look at this volume. Volume, 892,000 on GME this morning so far. And we're not even done with the hour. So... that's double the volume from yesterday. Price action still very subdued though, not squeezy at all. Just slow grind up, which you guys on Discord, do you even realize GME's ripping? I don't know. Hey Julian, 6.5% there. Now the options are waking up a little bit. There they are. Jeez, man. I wonder if this is a pull. No, it's not. It's not. Not even AMC is into this. Not even close. The one true soldier just moving up. Yeah, well, GME was looking poppy in extended hours. And then, yeah, let's see, yesterday, right here, there was all that volume. And it got kind of excited. And then the day before, during the day, you guys were watching that got me so stoked. I was like, what the heck? We hadn't seen a move like that in a long time. I've been watching barbecue more, but I'm still very, very closely watching GME, like more than probably most people in general. And we haven't seen that. This is a nice smooth action. It's not like crazy yet, though. You know what I mean? But it looks like it's going to get crazy. That's 7% and good volume. Jeez, I should have gotten more call. It's crazy. God, I'm gonna wait for a pullback, but the pullback might not happen until after we've hit some crazy levels. $21.23. I've already crossed this level. 2060 area. Just a straight green bar on the hourly. No, just no pullback. What is happening? Saw an article about GME about to repeat history. I need more calls. I just didn't get... I went real safe with my expiration, which is smart, but it's a little too smart. Right, there's finally a red candle. You know what I mean? You don't want to be too smart. Okay, okay. Settle down, reassess, figure out what's going on here. If you get a pull back to VWAP. Earnings didn't get released for barbecue, no. We haven't heard anything on earnings. New regulations, I don't think that's causing this on GME. That all is such a long, like if that actually is going to do stuff, it's going to be a long time before you see, if you ever see anything at all as far as price action. It's not going to be like some tweet you saw about Gary Gensler saying he's going after, keep an eye on shorts. They're not going to just, that's my opinion at least. They're not just going to, it's not going to start going crazy. Just loaded the account again. Oh, I forgot. Yeah, the options I could day trade because I can get different strikes. That is true. It's been a while. Been a while. I'm not really doing short-term ones though. These ones I have are not really doing like weeklies, which maybe I should next week's. I might grab some weeklies actually. Out of day trades on that account. Weird being on a Friday too. Thanks guys for your likes. 24. Came here for the barbecue, but stayed for the games. 24 likes. Thanks guys. Yeah, I like the June, end of May or June, because that'll cover OPEX, that'll cover P+2. We really start to like a pinch right now, or next week even. It could start next week. We've seen it rally into, oh, next week would be a week early still. What the heck? Maybe this is insider buying. No, that's what you guys have all been speculating coming, or what I've read. Because this price action is a little different too. You know what I mean? It's not like covering. It's just smooth. Oh, I know Polt was saying he's buying more, but that dude only buys like 100 shares at a time. Yeah, we're looking. Oh no, this is a short. Okay, so this OPEX is at the 19th. So yeah, next week would start SLD. Well, this might be a crazy month. If GME rallies into OPEX, that's 2 weeks basically of rip. Because then you've got a little gamma squeeze going on this second half of the month. Getting more PS5s. I don't know. I don't know if it's covering rollover stuff or maybe insider buying. Weird to see GME just wake up though. I mean, it's wake up, but then also be like mellow about it. Very interesting. What does SPY do there? That's not it. SPY just consolidating up here. Could have held my short, but I don't like it breaking that 410. I don't know how high it wants to go if it's really staying above there. Yeah, I might go long actually on the futures. Bull flag. Rays are so high already on the day. Yeah, I'm going to. If someone wants to keep going. Crash bullish on the MACD on the hourly. Oh, never mind. We've got an hour to finish that. Looking to, there's an engulfing candle there. I'm not going to hold this. Price action. We'll see, we'll see. Price action is good. I don't like that engulfing candle, but it's in the middle of a bull flag, basically. Above a higher support level. GME back down to VWAP. Barbecue's still just hanging out here, up 12%. Weird little morning pump there. Rubel's still hanging out up 39% above VWAP. Carvana below VWAP, up 35. Redfin's still grinding up. Open door. SI is breaking out 26%. Broke that 147 level. This one could definitely get squeezy. Yeah, GME's having big moves today. Move my options around. I closed my longer dated one and opened up some shorter dated. SI 30% here. I don't like the IV on this thing, but should have been watching it. That bull flag was perfect. Wow, these options went from 4 cents to 15 cents this morning. These dailies. %30 on SI. $16.80 is kind of a level I have from before. Yeah, I'll see what happens in that area. If you get some resistance. 32%. Things ripping. Rip rally. 1552 is gonna get halted. Surprised actually it's not already halted. $70. Good volume coming in the last 5 minutes. Okay, it looks like it's kind of rejecting that level. 1675. We have 1680 on that line. Let's see if that stays resistance. Buys up almost 1.5%. We can move back down to VWAP. Volume's still very good on this though. I think I'm gonna average into calls a bit. I don't know. If it's insider buying, like I don't expect a huge move. Unless if it's like a lot, like RC. It's the beginning of some type of rollover this month. Definitely a good play. On up, bounce back up to VWAP. Fubo's still hanging out up there. Looks like it wants to break out again. Barbecue just consolidating in this range. Got like 1182 for support and 1270 or so for resistance. So still a gap that it made down here. It needs to fill. Really. Yeah, I'm gonna kind of fully pick at these calls on GME. If I can snipe some good fills. Barbecue move back up to VWAP. Yeah, SI projecting that level we have there. Big move though, 30%. No news on that, just regional bank rally. God, I mean, Pac West was halted this morning, up 50%. Yeah, FRC is now done. I'm melting up more. Nine plus day per weeks. That'd be neat. I don't know if it can go that slow to the upside though. It seems like it just wants to go fast. Laughing on my yacht. Decent video up almost 3%. Ah. Fubo 40%. Nirvana almost 40. Silvergate moving back up again. Or at least consolidating at these highs. All in, GME. But have you gone all in again? Barbecue moving up a little bit here. Round VWAP 16% up. Pretty bullish if GME held VWAP. Broke through that resistance at 1940. Left a gap down there. That's alright, GME doesn't care about filling gaps. Getting it always fills its downside gaps. Yep, Fubo's up 40% from earnings, looking noise. Cash clear puts on those are finally happy. I have an order to close them out. SPY, new high on the day. Coin is kind of coming up too. This thing has a big ranges. I'd like this above 60 before OpEx. Down on those. I have 60 strike cash secured puts. SoFi. 4.5% up. Startup 6. One still has earnings. I'm melting up still. Miss my GME. now you're trading with the dirty rats on the OTC. Yeah, I mean, we had this divergence that set up like beginning of the week, like candle, and that's when I thought it's not going to fill those gaps. It filled it some, but there's still some more to go. Wedge here, yeah. Both coming down. Still just melting up, man. 1.5%. 412, I'd say, maybe 412.17, around that area. Remember I had the long? Got stopped out on the long yesterday close. Got the long for the end of day rally, and it like just kind of petered. Stop me out. That would have been nice. Actually been able to hold that one. Been a crazy move. Put a stop loss on these futures. Don't need to be riding stuff into the red. I'm far enough up on it that it should stay good. Comes back down there, it's probably done anyways. Yeah, GME bouncing on view up there. I'm gonna up my price on these calls a little bit. Back to the crappy options market maker on GME. Really just screw you. Maker had me chasing. Oh, barbecue! AMC waking up? About time. Knew GME couldn't leave without AMC. Its best pal. I closed my futures actually. I don't like that candle. I don't know. I'm putting a stop on it. Right. I didn't put it in. It wasn't. Be looking at it, so this is the easy way. Not look at it. Barbecue down a little bit from VWAP. It's up 11% still. 77. Bill in those GME calls. Fine, I got filled. I had to up the price, of course. Can't be getting a good fill on GME. On Weeble, you can set it to automatically show the gaps. So, yeah, it's nice. Don't ever have to look for gaps. Always have them in. Morning, DIY Vic. The Vic. Bruton, Morgan. SI coming back down to VWAP. Nice run on this thing today. Very nice. Wake up with volume. Fubo kind of had a sell off there. Low VWAP. Nirvana's still holding up. Redfin still going up actually. Open door. Gap up. SMX. This one trades like it's OTC. Wide spreads. Sketchy to get in and out of. Cash is kind of bouncing on that support level. Still hanging out at the high here. 411.64 is a high on the day. I think it's broken through some resistances already though. 410.37 was a big one. 411.34 was on my next little resistance, but not really a major one until higher up. 412.74 maybe. Barbecue still flat, but it's up 13%. Had a 23% gap up this morning. This candle's not really reflecting that though. GME showing support on VWAP's very bullish looking. morning. Yeah. GME. Nice bull flag. I would like to see a hold VWAP here. Volume is good though. It's kind of stayed high too. Relatively. Yeah. Most volume I've had in a bit. Bitcoin could jump nearly 70% if the US defaults on its debt. Chartered analyst has said. Oh yeah, the filing with RC in it. Yeah, that doesn't give me bypass reason, which is strange. But then the other, on page 5 of it, talks about in 3 business days after the entry, the interim order, or as soon as reasonably practicable thereafter, the debtor shall send the notice of this interim order to all parties that were served with notice of the motion by first-class mail and email if available, including any broker, bank dealer, or other agent, intermediary, or nominee of a beneficial holder of common stock, preferred stock, and any known registered holders of common stock. So this is highlighting that RC is basically a holder of shares in barbecue. Seems pretty likely. Based on that. Russia's economy is facing a record workforce shortage. It's still melting up. Right at VWAP. The AOS sold off quite a bit. Google bouncing back up to VWAP. Redfin still on the move up. SI back to VWAP. Holding above that 1470 level. Pandora holding above VWAP. IEP with that gap up. Gap and go. MX holding where it's at. BBBYQ been getting some action today. Big volume in the last 5 minutes, up 15%. Now I'm getting a little bit of IV crush on these options on GME. The risk of buying into momentum. BRX might be a good money bet. %. Oh yeah, this is one you've been talking about. That has been a nice trade, huh? Wow. It's 4x from down here. Not gonna default. Bud Light? Poor choice of beer, A's. IBRX has had quite the move, man. Well done on that trade. Mole, 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 mole. Ubo, little bear flag. I still wanting to climb. Up 1.5. Barbecue, just consolidating today. Nice tight range. Well, relatively tight, I guess. Aside, back down to VWAP. GME is holding above VWAP. New York Attorney General says their bill will require crypto companies to refund customers who are victims of fraud, as banks do now. You mean might be breaking to the downside of VWAP here. Combined market cap of the 143 banks in the S&P Regional Bank ETF ARE is 405 billion. Apple's market cap is 2.69 trillion. ECB must consider lagged impact of policy, Mueller tells. Oh, I got stopped out. Yeah, SPY's coming down. Didn't even grab the short. Crazy. I don't know. Chill on it. Bad. Yeah, it just kind of wicked down there and got me. Ubo bear flagging on the 5-minute. Give me holding above VWAP. And still, I think this is pretty good volume. Yeah, this is the... Yeah, we're holding up, sustaining much higher volume than yesterday. Yep. Good signs for GME, that's what it needs. Barbecue coming down a little bit. I should have closed the gap right open, oh well. Yeah, that's alright. As long as I think holding this 1030, that's a important level to hold. Morning, Donero. You finally come back because GME's moving. It's time. Americans haven't been this worried about their bank deposits since 2008 financial crisis. They forgot the great. It was the great recession. It's not financial crisis. CEO Tim Cook says layoffs are a last resort and not something Apple is considering right now. SI holding that level there. one point I like doing cash grid puts on this one. Pretty widespread though. Bubo trying to climb back up to VWAP. Come on, right at VWAP. VAOS might be climbing back up. IEP staying above VWAP, up 18% still. SPY did just stop me out. Yeah, a lot of the move was just from end of hours and then just the morning. That's it. Anyone on a previous outcome wanted to see maybe meaning steady price action? I thought it'd be steady, but I didn't think we'd just rally out of it. I don't have much experience with OTC, so I just started looking at examples. You know, we saw them on stream, and just based on those examples, I was expecting a sell-off into it, which it did. It did actually get. I mean, it gapped down 50% at open, but just ripped out of there. Where other ones would gap down 50 or even 80% and then just flat and slowly melt down to 90%. Yeah, I'm not sure exactly the reason, but I like the price discovery. I like the natural price discovery and lack of payment for order flow and high frequency trading, and it's like, yeah, it's really nice to see. But I'm still not certain if it's just like a initial OTC pump, them unwinding put options is what I was hearing, which maybe could be at the 50-cent strike, what that one guy was saying. I'm not sure if that would. I mean, there is a lot to unwind though if you think about it, because all the options are basically worthless unless you're exercising them, so they're not really being traded. So that could have some pull in direction on it. But I just feel like all this huge drop was algorithms, high frequency trading, payment for order flow, all that was going on, and we've really had no relief rally from that. Just internalizing, everything, and now that we're free from that, we're seeing some of the relief rally more or less from it. And I think it could go up quite a bit more just based on that alone without any news or fundamentals. Yeah, calm day at work. Yeah, we'll blow up 5 cents. Yeah, kind of crazy. Dang, it did just wick down and stop me out. BAOS halted to the upside. significance move for VWAP. SI bouncing on VWAP also. Looks like it's going to move back up. I don't like the options on here. It'd probably be the shares. Hey, Christopher. GME. Okay, okay. There's kind of a lot that's gone on, Don, since you've been gone. Last 2 weeks have been crazy. There's quite a bit of evidence that would
ask you about CPI.
Confirm that RC is still involved. But whether that's good for us shareholders or not, I don't know. Probably better than Icon, or I don't know, most, if they were going to give any value back to shareholders, depending on what the restructuring has. Morning, Zoomy. I do like this price action on GME this morning, though. Still not convinced on what exactly is going on. The volume's staying pretty elevated, which is good. It's holding above VWAP. I want to average into calls again. Could be insider buying, but I'm hoping it's not just that. Yeah, I mean, I don't know. I don't know what I kind of do, but he's maybe not as favorable as some are thinking, though. That's probably. Yeah, OS still halted. SMX maybe starting to move up a bit. Wayfair's up 14. Do they have earnings also? Price target raise. Yeah, they did have her. We got G coin. Pull up. Nice. Noise. I did end up coming down. It was a good stop out. Yeah, I mean, yeah, there's stuff to catch up on Discord. Yes, I didn't share all of it on Happy DD. Like if I see it in media, I'm not usually gonna reshare it. So But yeah, it's in media, it's in DD. Basically the bankruptcy filings and the court. We watch the court or listen to it. The latest thing that just came out today was about probably didn't catch it this morning, but Ryan Cohen's on the interested parties for one on the bankruptcy filings or whatever. He's listed as an interested party, and then on the notification that they have to send out of whatever's going on, he's on there also, and classified as, I think, a shareholder is what I kind of gathered from it. So
My teeth into. Thank you. Good to see you, Sam. Have a
it's
great
babies
weekend.
to retain his
Sam
youth.
Stovall, CFRA. Thanks for being here. Plenty more to come here on
I
Trading
like that.
360.
I gotta be careful trading SPY today. This might not make, but chopping around. Most of the move's probably done. 1.5% up almost. GME is so flat at VWAP. Firm announced earnings too. A lot of earnings last night for my watch list. Earthquake jolts Japan's Ishikawa prefecture. No tsunami warning issued. About 4 in 10 U.S. small businesses say they were moderately concerned about the health of their bank last month. I kind of just hanging out up here. It's up almost 1.5%. Barbecue, kind of at the low of the range, up 11.8%, 1185. Wondering if we're going to get a gap fill here or if we're going to hold level from this morning, 1140. I did close out on my shares this morning. Probably dip buy if we get it either at 1140 or that breaks, gets up at 1030. Not sure how much exposure I want over the weekend. I feel like most of the news would be positive, but probably a lot of negative news could be put out also, so still very risky. But I think I do want some exposure over the weekend. Boyd Gaming announces additional 500 million share repurchase authorization. What? Boyd Gaming buying back shares? Oh, really? I kind of remember them. I think I'm still wanting the short on here. Its RSI divergence is still there. I mean, that was bearish all this, but maybe that whole move was done. I don't know. Still have our MACD still bearish. These are so close, man. I don't even know if I'd do those divergences. Pac West is halted again? Wow. Fill in the gap. I think I want to puts for this over the weekend. What was the other one on the wall? All still trading. VAOS. Big gap up to VWAP. Fauna still up there. Redfin. Jew. Open door. 23%. A lot of earnings gappers. Silvergate flush below VWAP, below that 1470 level. Base holding up pretty well. 15%. Might keep going that one. GME just above VWAP. Still that same spot. 20 bucks. 20.20. Barbecue still basically at the low of the range. 11% positive. 1176. Tanks are sound and resilient. Everybody knows that. Looks like GME might start to make another move. Starting to get a little candle, maybe a breakout candle. Next wave 413 and then 413. A little higher. Yeah, I guess I could see that. I mean, yeah, it's kind of still in this range. Didn't want to break out, double bottomed, and momentum's south, but it's bounced off of it. 413. Yeah, even a little higher maybe. I know it has to do with the fibs, so okay, 413. Basically just keep chopping back and forth in this range is what you're saying. 413 is the high, 100 is the low. Round and round we go. GME getting a little green candle here. Volume's still pretty good. It's stayed sustained. 38,000. Yeah, we're sustaining higher volume than had recently on it. So if this is the beginning of a cycle coming into SLD week, wait, yeah. Oh, that's next week. Now. Oh no, that is next week. Yeah. The last Friday being 26 is throwing me off. Yeah, because OPEX is 19. So yeah, could be a big run today, or this month rather. On GME, unlike we haven't seen in a while. We're already past yesterday's volume. Wow. GameStop. Should I have gotten more calls? Perhaps.
Tesla's actually been lower. I mentioned how we're kind of retesting the upper extreme of that range we've been in. This goes back to April 20th here. And let me just show you what I've got my eye on in terms of areas of consolidation that have been and continue to be forming at lower and lower levels. I've got two on this chart to keep an eye on, 185, 160. So here's the move we just looked at in terms of the run up off those lows that we saw last week, the breakout to the upside. But you can see that this could potentially just be another sell opportunity in this longer term trend as we work our way towards the upper extreme. again,
edge up a
of
little
this
bit.
range that we've been in. So waiting to see if we start to roll over near this, or if we continue higher and take out 185. I mean, that would sort of solidify this move off the lower levels here and kind of negate the working assumption that we're forming lower and lower value areas. And this chart, again, guys, goes back to the end of March. Taking a look at your bigger picture,
Weird
very
melt
similar
up.
pattern, right? And this
We
chart
might start to blow
goes
up.
back to the beginning of August last summer.
Phil?
You can see areas of consolidation that have formed at lower and lower levels. We're hovering right around 160 right now. I think this is the gap that Joe was talking about back in the middle of January, that he thinks we could come back down and retest here. But you can see, again, longer-term trend to the downside, short-term trend to the upside, but possibly providing another sell opportunity for those that are looking at that key area of resistance. Again, that area that we've been in since the middle to end of April.
Yeah, and some people wait for that pullback to try and get in. I mean, and the question too
I like
is
that.
whether
Just
you're
kind of stay in this range.
Elon Musk. Joe, great charts there, Ben. Joe, final thoughts here on Tesla.
Yeah, just selling that call allows me to stay in it and wait. I'm not necessarily banking on a huge run in the short term. Should it pull back, I have that extra cushion on that call. Maybe I can even add to my position using those proceeds on the pullback.
All right, next up, Carnival Cruise Lines. I mean, we've seen a lot of bookings. I mean, Expedia, for example, is up about 6% today. We are seeing folks still getting out there and wanting to travel, and the cruise bookings have been pretty good going forward. What's your thought on Carnival Cruise Line?
Yeah, so
Fubo moving up to BWAP.
We talked about the big cap tech. The reason everyone loves them, maybe into an economic slowdown,
pretty well.
They have lots of cash. They have relatively little debt. Carnival Cruise, on the other hand, they're the flip side of that. Negative cash, increasing debt. So I am concerned about them. If there is an economic slowdown, I am very concerned about what will happen for this type of company. So they'll be on the front lines, of course, if there is an economic slowdown. Right now, the data is not quite there. We're still seeing a strong economy. But for me, this is just a nice piece of insurance. For
Barbecue, yeah, flatlining a bit.
An economic slowdown. This will be one of the companies that gets hit. So I'm just looking for the downside, taking today's nice upward move working for me. I can buy a put out in the summer, and just if the economy does slow down, I'm quite confident this will be on the front lines.
Yeah, and look, there's been talk about a recession and layoffs, and so that would go with what you're saying. Ben, your thoughts?
Was exactly with what Joe was just saying, and I can understand his bearishness on this one. We were talking about Tesla being in a bit of an uptrend on the more intraday granular, but that longer term downtrend. In this instance, Carnival Cruise Line, downtrend on the more intermediate, downtrend on the bigger picture. I'll show you exactly what I'm talking about here. Let's begin with the hourly. You can see since the beginning of February, we were up around 1262, traded down to the March lows around 8.25, 850, and we've been sideways below 1050 cents. So do the math. You can see we're kind of just consolidating and hovering around this $9.50 level, but you can see areas of consolidation that continue to form at lower and lower levels without retracement, without rejection. And this, simply put, is acceptance of the move that we're looking at, again, throughout February into the beginning of March, middle of March, and we've been sideways since. A step away from this more intermediate hourly candle chart shows a very similar pattern playing out here, and this is a bigger picture chart. This is a daily time frame. We're going all the way back to the beginning of 2020.
Fubo popping up again.
Taking a look, you can see a similar
VWAP
pattern in terms of what we
through.
look for. That high conviction trade on the left side of your screen, and then you can see the consolidation that's been forming. So again, 1750, the key area right now. We're holding well below that, you can see. But notice on the left side of the screen, again, the lower lows, the lower highs. That's high conviction trade. And then this right here is much more overlapping, rotational, with a lot of less, real well-defined trend environment here, just value forming. Looking at another chart here, I've got, in this instance, the weekly, and you can see, again, a very similar pattern. It's top left corner to bottom right corner, but you can also see these areas of consolidation. I went and identified staircase-type pattern, exactly what I look for, Nicole, basically solidifying at each and every stair that we take down the working assumption that value is forming a lower level, that the market's trending lower, no rejection as of that yet. And again, the first real indicator that we're rejecting these lower levels would be trade above 1750. Look where we are. We're $7, $8 below that right now. This is a stock that's under pressure on multiple time frames, longer term trend to the downside. Again, I can see why Joe's somewhat bearish
GAAP
this one.
EPS and the revenue both beat.
Understood.
And sold off
All
like
right,
that,
so
huh?
look, Ben's agreeing with you at this point, Joe. It looks like he may be on your
They didn't like their
side on
guidance,
this
I
one.
guess.
Okay, any final thoughts, Joe, on that?
Yeah, I mean, a big upward move today. That's not necessarily a sign of an extremely healthy stock. There is some short interest in here already. Sometimes short interest gets in a little earlier. Maybe they're just taking some profits. Of course, it's had a tremendous run lower. So for me, it's a good time to reinitiate looking for the downside on a day like today.
Okay, and next up is Occidental Petroleum, which obviously Warren Buffett has been a big proponent there, has been adding and adding and adding. Right now, it's at around $60.
Let's
we
get
have
cooking
seen
barbecue.
oil down for the third week in a row.
We might have to wait for next week.
Petroleum's up about 2% today. What are you thinking here?
Yeah, so I'm just thinking the type of move that oil has had lately, you might think, and you know, I would give you credit for thinking, hey, it's time to come in and buy some energy names here. But the type of downward move oil's had recently does not bode well for energy stocks over the next 2 months. Usually this type of conviction downward move in oil signals a more underlying weakness in the economy, a larger weakness, and it does take time for that to recover. I think in the short term, we're gonna see energy prices suppressed in these levels, and will come
Barbecue looks like it might drop from the support.
stocks, just the same. So just looking for a
Up
short-term
9%,
downside
it's
here.
1165.
It goes along with a potential slowdown happening globally, a global economic slowdown. So another insurance spot for me for my portfolio. Again, I like big cap tech, I like staples, but looking at an economic slowdown, this is one area of potential weakness for me.
And, you know, people loved it, and to your point, I mean, but it hit that high of $77, and there was a point where we were saying it was up 100%, right, almost, and now it's down. It's down 1 month, 3 months, 6 months, year to date, 1 year. Nothing good here, really, for Occidental Petroleum of late. Ben?
I'm moving back up.
Here in terms of Joe's assessment on this one. So I guess we're 3 for 3 today. Now, in this instance, a more upward trend when we get into the bigger picture, which I'll show you in a second. But first and foremost, the weakness Joe just spoke to, you can see over the last couple of weeks, we've traded from, well, 65, 66, bottoming out recently around 58.
Moving up, GME's moving with
inching off that right now, but still a very well-defined trend, top left, bottom right. And as I look at it, take a look with me. You can see a couple areas of consolidation I mapped out on the way down. We got a pretty well-defined staircase-type pattern. A little bit of retracement last week up to that 62 level, but notice how it held. We rolled back over, vertical to the downside, currently balancing here right around 59.50. So as long as we're below 61, that intermediate short-term weakness Joe just spoke to exists, in my opinion.
Barbecue, little bounce there on that level.
A little bit of a different picture, right? The longer-term trend here has been and continues to be to the upside. And, well, you mentioned trading around 60, Nicole. This is a pivotal level right now.
33%.
You can see back in, well, we're talking the end of 2020, beginning of 2021, 18. We balanced out around 26. Here we can start to watch these areas of value form at higher and higher levels. We can establish that we're trending higher, and then the working assumptions that that's going to continue. So the bulls want to see this break above 77, form a new area of balance at a higher level after that breakout. But right now you can see how we're still contending with this $60 level and have yet to really see a retreat away from it. Now, we always talk about the significance of these areas of consolidation that form. I just wanted to identify this one that we're looking at in terms of the $60 level being that key level. Why? Well, because we've got a high up around, well, actually, I have it marked incorrectly here. It's 110, but it's actually like 118. You've got that low around 10. We'll call it basically $100 worth of range in here. So I just broke it down. $50 is the difference between two. And look where we are, the significance of the $60 level. So 110 versus 117 to kind of make that happen. But again, it just sort of points to the area, the middle of this range being that $60 range and significance thereof. So let's keep an eye on that short-term weakness, long-term uptrend. But 60 is going to be pivotal over the next couple days, couple weeks.
All right, so important levels there right in the middle of the range. Joe, final thoughts on Occidental?
Yeah, it's a great point. It's exactly why I'm an option put spread. I can define my risk. It certainly can have that upside potential, so I want to just have a defined risk there. And again, this is just broader protection for my portfolio. I just want to get some names out there. If there is a slowdown in the economy that is going to go south, I'm looking for downside protection there. And that's how I like to protect my portfolio with options and volatility.
Yeah, absolutely. Great to see you both. Thank you both for being here. You know, I had to just double check. PacWest is up 82%. Ben, you and I talked about this yesterday, that maybe we'll see a bounce back for some of these names. I mean, that's a bounce back. Joe Tagay and Ben Lichtenstein for the Big
Lichtenstein.
Three today. Thank you very much. All right, coming up next, we will spotlight OpenText. This is the largest tech company in Canada.
GME moved up a little bit. I'm not just chilling with SPY now. Rocket have earnings? Yep. I start cuts. It's not dead, man. It's up 10% today. After it's up like 130% this week. You're crazy. Like I said, if it doesn't close red today, that's crazy. That's awesome. Thinking about some SQQ cash secured puts as a hedge. Actually, I don't. Yeah, I guess GME even. He's pretty low, but. Oh. Fidelity's saying GME earnings are on May 30th. Is that still just anticipated date? I haven't even looked. So my calls are covering earnings. Wasn't even thinking about that. Kind of a good thing because the high IV should be somewhat locked in. Should only go up. I mean, not necessarily only go up. There's not going to be IV crash until then, and most likely IV should increase up until earnings. Let me see when they actually. I don't think they've announced yet. E-Trade's saying 531 also post-market. Have they announced? Barbecue's coming down a little bit. Just below that range. Up 9.72%. 1163. Nasdaq's estimating it's June 7th, so they haven't announced that. $11.80. Yeah, Fidelity expected 5. Yeah, so there's no announcement yet. All right. CNBC $11.85. Huh. That might be delayed. Unless if we start going up here. I'm delayed. Oh, there's 11.80. Okay. Maybe I'm delayed.
Support that could unleash the bulls in the broader marketplace.
All right, yeah, I see these overweights and a lot of them buys. Goldman with that 209.
Calls moved up a little bit. I actually sold them on this rip. I've been buying back in though, shorter dated. So I had September's. I've been buying back in for June, first week in June. They were moving so slow, the September's. I'm like, I need less time. You might just get a... Yeah, I saw that link, Lord, thanks. You might just be getting a... I don't know. Insider buying, maybe a cycle, like a covering of rollover swaps. I don't know, but it's been looking a little squeezy last few days.
Yeah, sure
Today's
thing.
been the
And
biggest
Nicole,
so far,
thank you for
but
having Open Text. It's a real pleasure.
maybe it's like ramping
So
up.
Open Text, we are the information company.
Because yesterday we had this pre-market move that was kind of crazy without the SPY, and it had a lot of volume too on it. And then the day before had this move in the morning without the SPY. So that's what I'm looking for in GME. Relative strength to the SPY, strong, and then volume, basically. And volume today is stronger than it's been. We have more volume right now than we had all of yesterday on GME, so I think it could be the beginning of something pretty big.
So with all of the,
yeah, I got shorter dated stuff because I don't need September. It seems like the move is starting.
Talking with executives, there's been so much about this. You mentioned cybersecurity.
But yeah, the IB is still low.
Where are you seeing the most demand in some of the which areas of the company bring in the most revenue, and are there any turns happening within the company?
Yeah, absolutely. So content management will remain our largest pillar, and we are very acquisitive. And having acquired
the ego on you.
Zix, we are a pretty scaled player in cybersecurity.
Ace Ventura, thanks, man.
And when you talk about turns, I do want to
appreciate
talk
your
about
5 gifted
AI.
subs.
AI and large language
Get some
models
hype
are
in the
going to be
chat.
additional and very adjacent
Hype.
The
paths
ego
to
on you.
context, and including cloud, climate security.
Lurker.
At a very,
Good guy, Lurker.
at an enterprise level. We're not a consumer
There you go.
company. We're
There you go.
hardcore, deeply
There you go.
experienced in
There you go.
enterprise and privileged
Senior
to have
Chief-
a large model
Senior Chief
customer base, and
Keith.
we're committed to
Senior Chief
delivering
Keith.
large language models to open text
You're
customers.
definitely a
And
lurker.
we
Ace
think
nailed
about
it.
AI and
He sniped you. If your name's being called, you need to come to chat and thank Papa Ace.
The ego on you.
Get on our Discord. I'll give you the Happy Crew role. Just send me a DM. Senior Chief Keith, you have been summoned. Bo Aurora. You're probably a bot. Tyler.
The ego on you.
Passing Cloud. We know you. Nighthawk. Nighthawk, you're lurking? How dare you? Come thank Papa Ace. You're not on Discord. Did I ever put a link? I never put a link for that. I'll put a link for Discord. Jump on there. I'll give you the role. Just send me a DM.
And look, the very best of open text.
And Ace, or yeah, if anyone wants to come chat on Discord, let me know. Just
and making sure
hit me
that
up.
the core open text delivered
Coming
great
up on
results,
voice.
and we did, but also showing incredible strength in our early milestone of onboarding and
Yeah, send me a
innovating
DM because names are different. I don't know who's who on Discord and
our revenues are 1.28 billion in the quarter. That was 45% growth. And for the year, June is our fiscal year end. We are out at 4.6
Thanks, Ace. Appreciate it, man.
Midpoint revenue range, and that would be about 31% total growth.
Papa Ace snipes again.
The OpenText results and onboarding.
The ego on you, kitty daddy. Ego. It's an ego.
As cloud is evolving, I know you work with IT, operations developers, climate innovators, and more. What are your expectations for the next year or two or three?
Look, I think OpenText is very uniquely positioned to be a cloud powerhouse for our customers. And 2 important points in the OpenText cloud. Our cloud has grown from 0 to a run rate of over 1.5 billion in just 10 years. And our cloud strategy embraces the full customer choice, i.e. our products are offered in public cloud, in private cloud, in API cloud, and off cloud or on-premise. And we are the largest provider of enterprise quality private cloud and have deep expertise. And you mentioned climate, and we find with all the noise in the market, the budgets for climate-related initiatives are not slowing down. And as a trusted and a security partner, OpenText is very uniquely positioned to do so. As I talked about fiscal 23, we have a range of 12 to 14% growth for cloud, and that includes M&A. And for fiscal 26, we have
little drop there on barbecue.
Organic growth. Our M&A philosophy
1151.
To acquire, integrate, innovate. So organic growth is a very key focus. And in all of this, we have a
getting close to that support.
Growth in enterprise cloud
1140.
So we see cloud opportunities across the spectrum of our customers.
And flipped into a green candle. 1190, 12.26%. Starting to look like a little OTC stock.
Sprint, Cardinal Health, Philips Healthcare, I mean, just to name a few, and you have some key customer wins this past quarter, including Citibank. Tell me, as you continue to grow and what you're providing these customers, I'm sure you're hoping to gain more and more as you invest in research and development. You have over 4,500 developers. Tell me about the key customer wins and who you're looking for next.
Yeah, absolutely. And you mentioned about investment. So 2.5 billion is going to be a 2-year run rate in our P&L to invest in R&D and cloud operations. And I have to mention Project Titanium is kind of our rudder. And what
horrible
Project
shot.
Titanium is, we delivered in 2023 full public cloud for enterprise content management. And our next 2-year roadmap through 2025 is a 2nd generation private cloud and 2nd generation API cloud. So yes, lots of customer wins to happen. And Nicole, our customers, we work with them on their long-term digital transformation. That's how OpenText operates. And the names you mentioned and many more are actually yet to come. And I would say the future of OpenText is going to be just to be that cloud powerhouse for our customers. And it is about innovation, and the innovation culture deeply permeates through the company.
Thank you so much for being with us. Nice to see you today. Madhun Ranganathan, EVP CFO of OpenText. Thank you.
And thank you for having us.
Coming up next, the disruptors. George Silas is standing by. Let's dive into the earnings of Block. Now, the stock may
Ray Dalio has said he has a little Bitcoin but prefers gold, calling it timeless and universal. CBS can no longer afford to purchase the Late Show with James Corden, as it raked in less than 45 million but cost up to 65 million to make. That's not good. Mazimus? Are you even in Discord? I got your DM, but I can't find you on Discord. On our server. Barbecue coming down. Broke that support, that 1140. Starting to fill this gap. Oh, maybe because you're not in it right now? Weird. I don't know how to give it to you like in a DM. I don't think I can. Yeah, you're not even in our server. Pipe. Got him. Barbecue filling this gap now. 1106. It's up 4.3%. Volume today? Well, Weeble's been off on the volume. But yeah, today looks like a lot less volume. Look on. E-Trade has been more accurate, I think, because it's showing higher volume. I'm assuming it's the higher one that's right and not the lower one. Volume today on E-Trade is 20 million. And on Webull, it's 9. Yeah, so Webull's still not showing the right volume. Yeah, if you're in Discord, just DM me, and I'll give you the role. Pause. I gotta even give you the role. I can't because it's just a DM. Let's see if I can find you in the server. I don't see you. Yeah, I don't see you in the server. There, you just joined. Alright. There you go. Happy crew roll. Welcome. Welcome, Maz. Bill Gap then fly. Did it just wick up there? Did it just candle up? Barbecue now 1150, 849. How bad is the spread getting on here? Pretty wide. 1118 to 1150. Yeah, it's a wide spread. Last trade was 3 shares. Discord is a place where you can communicate with people. Last trade was 3 shares at 1115. Trying to pump it. Wait, the last one was at 1115. Why is it up there right now? I don't know why it's showing 1150.
Metrics, right? Subscription and services, that revenue growth, you mentioned gross volume, transaction volumes. I mean, all of these sound pretty good. Tell me a little bit about how you would go about trading this, an example trade, George.
Yeah, so we got to consider, whether a stock is in a trend higher or lower, or if it's actually in a trading range. And if you look at Square, the stock is still in a trend, but unfortunately it's to the downside. So if you look at the levels of support that go back a few months, there's an area around $57.50 where it seems to find some footing. So we're not going to place an aggressively bullish trade. What we'll do is place a bullish to neutral trade that allows us to capitalize on these levels in which the stock is trading at, or potentially could go lower. So what we'll do in this case is go out to June with about 42 days to expiration, and we'll sell the 57.50 cash secured put And altogether, you could earn about $3 a share or $300 a contract. And that's about a 5% yield to the strike price. And it also gives you flexibility. This gives you the option. If you're assigned the shares, your cost basis is 54.5. That's if the stock would trade at 57.5 at or below that level between now and expiration. So if you think the stock is going to stay where it's at or continue higher, you're basically selling for a credit of $3, and that value will erode to zero. But you are placing this trade, or if you do consider placing this trade, you have to be willing to purchase the shares at 57.5 with your cost basis at 54.5.
All right, thank you for that. George Sillis, great to see you. Appreciate it. Good luck there at Block today. Coming up next, it's time for our 360 round. We'll take a look at the earnings from AMC. Stock has been struggling to build any momentum. One of our guests in our panel says it's a typical zombie stock. Find out what that means and what lies ahead for AMC right now.
We have 1 share orders here on barbecue. What in the world? Dude, IBRX 50% today? This thing kept going. It opened like right at that resistance. I wasn't sure it was gonna keep going. Oh. Wow. That trade. Did you stay in this the whole time, Tree? You mentioned it like back here. 100%. Monster move. $3.95. That's true. I didn't think about that. We've got $4 in commissions, and we have one to buy 1 share at 11 cents. That's the cheap end too. I think some are like $6 or even $10. You guys need to make sure you're aware of what your commissions are on OTC. It's much higher. So doing like little share purchases is, and especially if you're gonna go in and out. If you're just adding, that's one thing, but basically add $5 onto every share purchase, every transaction. So if you're only buying 1 share, you're paying $5 a share for it, or 4, depending on what. I mean, there's fees too. There's not just commissions. There's fees on it. You're out it open. Well, you still had a good move on it. That's usually smart after a big gap up like that, but that thing just not letting up. Yeah, I think I'm $4.95 on E-Trade also. On TD, I think it's like $6. Let me see. Or no, TD is the one that's $3.95 maybe. Yeah, no, $7 on TD. Right? charged me twice. What the heck? Yeah, $7. E-Trade I think is like 4, maybe 5. Hi.
I'm just getting dabs at it.
Thanks, bud. Barbecue. 111. It's 8,000 there. At 111. Gap's almost filled. 1099. There's no L2, at least not that I can see on OTC. Dude, look at that spread. Oh, never mind. The volume. Brown is a 254 on IBRX. GME coming down below VWAP. Yeah, it's a great move. 250. Even selling at 420. Alright, barbecue I think's filled its gap. I don't know what to do about GME, man. Something's going on the last few days. And continue to increase. Maybe it's Cohen starting to scale in. No. But I'm gonna hold these calls. Got support on GME at 1960 range. See if that holds. Barbecue gap is filled. Looking for the next support here at 1030. Might be starting to pick up some shares at 1030 on barbecue for a little weekend barbecue. Sweet honey barbecue.
That could be an asset that somebody might pick up, in which case we should potentially reconsider it going to zero.
Okay, David going to zero. I
Talking
heard
AMC.
David Trainer, New Constructs, Alicia Reese, Wedbush. Thank you both. Thank you, friends, for being with me.
Probably not
here
wrong.
On Trading 360. The Dow's up almost 400 points. I'm Nicole Petalides. I'll see you at 2 p.m.
Going to
Eastern
zero.
time.
She's like, okay, going to zero, right? All the apes are gonna hate you. I'm not a part of this. There's gap fill there on the old barbecue. Up 3% still at 11 cents. A green close today would still be good to manage. Look for maybe a double bottom like we did yesterday, or some kind of bounce on 1030. If that breaks, I might not even actually pick up shares for a weekend exposure. That's a support I'd like to hold. I'll probably pick up some, but still have a nice little inverted head and shoulders there. RSI divergence is still intact. That's not going anywhere. Yesterday's candle was kind of ugly actually on a daily. That inverted hammer. See, this is a nice shoulder line if you can hold that 1030. Tip then rip. Like flush then flat. Barbecue 1091 coming down. Gap is filled. Yeah, so this is supply and demand. This is price discovery. This people taking profits on a Friday. That's maybe exaggerated when you have high frequency trading and payment for order flow and all this stuff, and all these ways they can manipulate the stock price. Specifically on a Friday for options exposure to the market maker, but I think it is still somewhat of a natural trend, seeming so. Just need to stay lower for a couple days. I think the uptrend could continue next week though. I'm not thinking this is over. It's true, we've only had 2 days of up already, or so far. Really, because the 3rd, Wednesday, was that's when we entered OTC. It was just Wednesday and Thursday. Crazy. Seems like it's been an uptrend longer, but no, it's only been 2 days. And then today, if we, get somewhat of a green day.
And that's not the biggest story. The biggest story today is the recovery in the regional banks and the fact that the Russell is up almost 2%. So that is kind of taken some of that I think is driving the market. That's why the VIX is down so much. That's why you see the regional banks and the Russell, I see 1 or 2 maybe still down, but they are 98% higher.
GME bounced back up to VWAP.
And so I think you're looking at a little bit of relief off of some of the regional banks, Tom, even though Apple's numbers were good. Non-farm payrolls, I don't know if they were good. I mean, I thought the inflation data was pretty alarming with wages going up more than expected, both month over month and year over year. But, the revisions to the last 2 months jobs was pretty significant. 149,000 jobs revised off this number. That's softened some of it, but yields are significantly higher, and the dollar is soft, actually, a little bit surprising. So all things considered, Tom, I think this is a regional bank relief rally here that we're getting more than the other two.
Yeah, I kind of agree with you on that, Kevin. You have the jobs data, which, if there were no Apple earnings, there were
kind of a nothing burger.
Yeah. Then maybe we would have been down a little bit because that's inflationary, as you mentioned.
There's a green candle on barbecue.
Earnings
back up.
Data was a little bit higher than expected.
We'll see.
But big story today is Apple post-earnings.
Close to this support.
Caroline Wood, senior markets correspondent here on the network, to help us break down this story. Caroline, big, huge buyback and dividend hike, and everything's golden for Apple, right?
Yes, and also a beat on both the top and bottom line, despite the fact that earnings and revenue actually fell from the year-ago period. But, you talked about those regional banks. Obviously, there's some new investor appetite today for them, but we've been seeing, obviously, waning interest amidst this banking crisis. And I have to say,
pop on oil today.
Tim Cook didn't give specifics around what demand is like for
I
their
look for
new savings account.
a short entry on this one next week.
4.15%, but he says the response has been incredible and that they're very pleased in the response. So Apple definitely giving some of these regional banks especially a run for their money. But yes, shares higher today. As you can see, up almost 5% today after both earnings and revenue topped expectations. In the earnings release, CEO Tim Cook said, "We are pleased to report an all-time record in services and a March quarter record for iPhone despite the challenging macro environment. and to have our installed base of active devices reach an all-time high. Further proof that maybe iPhones are a consumer staple after all. EPS of $1.52 came in higher than the $1.44 that analysts were expecting. Revenue fell 2.5%.
Looking for a trade entry.
$94.8 billion. It was the second consecutive quarter
seen
of
anything.
declines.
Yeah, it's just been
Still
choppy.
managed to beat analyst expectations. Breaking it down by
This
segment,
might be a short
iPhone
even.
revenue, of course, Dan
Got
Ives
an engulfing
calls
candle
this
there.
segment the heart and lungs
Yeah,
of
dropping
Apple.
it short.
Really, that business grew.
Red into the 9, bearish MACD, and we kind of had it trending down slowly. Kind of right at support though, so could bounce from here or could flush down the VWAP. Look at that weird VWAP, by the way. That's very strange.
The expectation was for 21, so slight miss there. Mac computers also fell short. iPad revenue was basically in line with analyst expectations.
BBBYQ holding at 1138,
was down about 1% due to macro headwinds, but the watch installed base hit a new record. I will say during the quarter I had to buy both a new MacBook Air and I ended up buying an Apple Watch as well. So you're welcome, Apple. But also just want to note the key region of China, of course, revenues there fell 3% to about $17.8 billion, but was an uptick from the December quarter. In terms of what's next for Apple, its CFO on the call said it expects revenue growth in the June quarter to be similar to its March performance. So just as a reminder, that fell about 2.5%, so could be another quarter of declines there. But
actually probably do more contracts
investors
now.
Clearly just focused on the positive.
Yeah, I could probably
today.
do
We're seeing shares up almost 5%, now up more than 30% so far this year.
Caroline, what's the disconnect, do you think, between Qualcomm's earnings and Apple's earnings? Did they mention anything about maybe the fact that they're making some of their own components?
The force is strong with you.
So it may not show up in the weakness of other firms because no one thought that iPhone revenue would not only beat expectations but be up as opposed to year over year.
I guess this is like a bull flag intraday.
That's the biggest shock. If we needed any indication that this is still an iPhone company, we're getting it today. But I find it fascinating, the disconnect between some of the makers of the pieces and Apple's strength in iPhones.
Well, I think Apple's strong margin story continues to be a bright spot for the company. I know Dan Ives specifically called that out in his note, saying the margin story at Apple continues to get better and better as Cupertino now owns more of its supply chains, and then also says and is flexing its muscles, which investors are happy to see.
Lillum,
also points out
23%.
$90 billion buyback.
This chart's nice looking. Wow.
On top to the Sunday. So he was one of many analysts that did note margin growth there. They definitely edged higher. I think the big question, I mean, obviously Apple has been strong. I think the big concern now, though, Kev, is more about valuation of Apple because, as I said, it's already up more than 30% so far this year. At what point is all of this priced in? I will say analysts were bullish going in. About 80% had a buy rating ahead of this report, and the price target has only moved a little bit higher. It's now at 180, but that's only about $3 upside, a little bit more than that from where it's currently trading right now. So we did see some price target hikes, although I will say
SMX kind of moved up there too.
Cut their price target to 180, whereas Atlantic Equities is now at 200.
Bouncing off that
support. 195, but we also saw some positive commentary about valuation on this front.
Silvergate came back down below that resistance level.
Some investors squirm about a 26-time earnings multiple. We believe the resilience of the business proving out in the numbers currently as well as in the early part of the pandemic in 2020 will amply justify the reason to pay a premium. Bernstein says we see
BBBYQ hanging out below its resistance.
Continuing to grind higher near
term, 5% though.
But are cautious about the opportunity for material multiple expansion in the longer term. So I think that's going to be really the key going forward, is just a valuation story here, Kev.
Yeah, I think one of the overlooked items in this report was CFO made some commentary about India, which is still only about 3% of their revenue. They opened their first store there. They have some manufacturing now there. That's 1.2 billion people in that market to kind of take advantage of. So maybe the next growth area for Apple. All right, Caroline Woods, senior markets correspondent, helping us break down the earnings post Apple report. But now let's bring in Alex Coffey, senior equities contributor here on the network. Alex, I wanted to get your take here on the non-farm payrolls. Kevin mentioned there's a big revision over the last 2 months of minus 149,000, but that unemployment rate, 3.4%, lowest level in 54 years. So another strong jobs report, another thing that the Fed has to worry about.
I mean, you'd rather worry about that than the opposite. So I don't see it as necessarily a bad thing. I would say, though, that the headlines read a lot stronger than the reality. The reality is we've beaten for 12 straight months on this report, but we're quietly revising the numbers down the next month. So I don't know if that's by design or just coincidental, but that's really been the story. You look at the ADP numbers over the last 3 months, they've actually been more indicative of ultimately where things end up. So you look at what we got this week for this one, it's actually pretty strong. So you could end up with this one actually holding on to about where this is, but that's speculative. What I would say is I don't think there's anything here that's overly alarming. I think the Fed has ultimately signaled without signaling that we're basically at the end here. Are we going to get cuts? Quite frankly, it doesn't really matter, Tom. And the reason I say that is if we get the cuts, it's because the fears that the market is pricing in right now became a reality, and they're not just fears. So you'd actually probably, if you're a market participant, rather the Fed keeps interest rates where they are, because that means we probably avoided some of the worst outcomes that the market's kind of thinking could come to reality here soon.
Yeah, I think, those concerns about potential cuts by the end of the year, you have to wonder, Kev, if you look at this, the market's pricing in some cuts, but at the same time, is it warranted? Is that tough jobs market or that tight labor market, is that going to equate to a potential soft landing here, Kevin? Because you got unemployment at 3.4%.
SPY just or GME just holding a VWAP
that are beating on a monthly basis.
Crazy.
Where even if we do see that economic slowdown, it's not going to be that bad.
Think about it, Tom. We're going to get another CPI data in the middle of next week. We'll get CPI and PPI Wednesday and Thursday.
Week.
But you've got a core PCE that was flat month over month.
What day before run next week, end of the run?
Job openings going
barbecue?
in the right direction. One good thing, the leisure and hospitality numbers from this jobs report were pretty mild at 31,000. Remember the ADP data, it was a big number, like over 150,000 in leisure and hospitality in the private sector. So none of these things are showing any.
It depends on how today closes. I'll consider next couple weeks, but yeah, it's looking good. Like momentum's still there. This is basically just a big bull flag from the low.
Or more
I guess I was expecting this since yesterday. That's why I closed out here. I literally closed right here.
Could be, we've talked
I have
about this
bought some and reclosed
could be that thing
this morning.
That makes interest rates go down.
This is
there could be
pretty
some
typical.
event
People
risk
taking profits over
on
for the weekend
that we don't know about.
So
that's the only thing.
I'd like to see it hold some levels, like this 1030 level. This would,
lower
if it really flushes through here, then
I'm
not as hopeful for next week.
An economy that suddenly shuts down and plummets to the downside, which
but if it holds here, I think momentum's still definitely there. On the hourly, we've got
could do that. Besides
inverted head and shoulders.
These numbers are going in the wrong direction, guys.
Yeah, Alex.
Got this RSI divergence.
CPI, PPI data next week
daily,
on
which
Wednesday
is,
and Thursday. That's going to
good
be
looking
important.
signal.
But we've still got some more earnings that are coming out.
Volume
next
you can't
week.
really measure.
PayPal's in there, Airbnb.
But,
Western Digital
seems like the volume is
momentum,
maybe tapering off today, which is maybe normal for a Friday. I'm not sure.
Oil's rebounding
and the fact that it's selling off on
today.
lower volume is good. That's bullish.
Forward.
That's not higher volume.
We've gotten 424 of the 500
yeah, everything looks good still. And I'll probably be picking up shares at some point today to hold over the weekend, or maybe a Monday sell if it's or maybe sell on Monday and buy back in on Monday. Just overnight hold them basically.
In suspecting that earnings were going to be worse than they had been in terms of growth, but they overestimated that. We've had huge surprise versus estimates, but we've actually seen declining growth. So right now, thus far, with almost let's call it 85% of the names, we've seen earnings come down by 3%. That being said, I'm not super concerned with that many of the names that are left on the calendar. I think the majority of the important ones are done so far, Tom. But if I could, real quick. I think Kevin's alluding to the key point here. Nothing that we see and what we've gotten in data suggests that the Federal Reserve is going to cut rates, right? Yet the market is hell-bent on the fact that they're going to.
Right.
Okay, so for that disconnect to be something that makes any sense at all, there has to be something that happens. Well, the things that we can see that could happen are the regional bank / financial crisis gets worse, or there's a significant economic slowdown. Okay, so I don't know if either or both will happen, but the market is certain to the point that they're pricing in with 100% probability we will see some lower rates at the end of the year. And so that means that there's a certainty, at least from the market's perspective, that one of those two things or both are going to be a reality. So I'm not saying that they are going to. I'm just saying despite all the rhetoric, despite all the data, the market's still pricing that in. You have to ask why, not necessarily be so focused on is it going to happen or is it not, but rather what would cause the market to price that in? That's the key question to ask.
Yeah, Kevin, we talked about this yesterday. Alex brings up that great point that, you know, the market's pricing in cuts, but we've stated on the show repeatedly that it's going to take a catalyst, like maybe some further damage as far as credit goes, the financial sector, to kind of break this market at this point, right? Is that what everybody's expecting, that we do go into a recession, you know, in the latter stages of this year?
And let's go through some scenarios. What could it be? Could it be commercial real estate, right? That could be something. Could it be regional banks like Alex mentioned? That could be something that's more. I think we're rallying a lot today on the Russell being up 2%. I mean, what could it be? Could it be a severe, like, U-turn recession in the economy? Could be. We don't say never. We don't say always. But that's a low probability right now. It doesn't look like this market's doing it. So it's something, guys. Alex is right. They're pricing in something the second half of the year. We just have to figure out what it is. Fill in the blanks here, guys.
Yeah, it's a wait and see kind of mode, but a little enthusiastic today. Hey, guys, let's take a quick break here. When we come back, we're going to take a look at another bank name, post earnings about 3 weeks, and that's JP Morgan. It's rebounding from losses this week in today's session, up over 1%. But you know, this will be probably most likely the winner in this space. Who knows? But they have gathered a lot of assets recently.
Dom, do me a favor. Think about it. Think about it. Barbecue back at the lows, 1080. 1.89%. Fine. Looks like it wants to come down to VWAP. We'll see. It's been strong. Bubo popping up above VWAP. GME right there, flat at VWAP. Nice consolidation after a 4.2% move. Bull flag with volume. So I kind of want more calls. Good thing, Julian. Ticker DXF is being pushed by Wall Street bets soon. The baby has arrived. Rocket Ape Baby, U.S. stock market. The next HYMC type move spy to 415. Thanks, Mysterious, for that. Appreciate your insight on this hype stock. Actually, this does look pretty good. The bank? A Chinese bank? The best of both worlds? Sketchy Chinese company mixed with some bank pumpage? Website is not found? That's the best kind of website. It's 25% at this price? Gnarly. It'll bounce out of the lows, yeah. Yeah, DXF is interesting looking. Like that chart. Oh, you picked up IEP? I'd like it for like a long term, and I'm negative right now on my long term. I did actually deposit on there. Hoping to take some barbecue gains to deposit on there. I shook the money tree. But then yeah, maybe for a long term pickup. 28.29 was 17 prices, which pretty legit. But I mean, yeah, you could trade this thing even 22% today. That ain't bad. We've got 2 out of 3 government branches active. That ain't bad. Ah, SPY, bouncy. Bouncy. And small gains there, but nah. I think this probably wants to go back up and retest that high, maybe even break out new highs. $22. Barbecue, little flush there. New low of the day, 1060. It's break even from yesterday's close. Pretty big candle there on Le SPY. He's not getting it. $1082 and 109. 1082, 1105. Spread, man.
Now is a time where if you consider, maybe all of this tug of war kind of ends up with a sort of a non-event for the stock.
Wall
this is a
survives.
time where maybe you could consider selling volatility surrounding
Yeah,
the stock.
I was reading stuff about saying there's no way Wall's going to fail.
But a ton. It might
like
leave
we've
on
heard that with
both
every bank.
sides of these bounds, which are fairly tight. We'll get into the specifics in just a second here. We have it up on the screen.
I think I might want
Ultimately,
Wall
maybe it comes back and settles in this area.
hack
So,
W puts for
I
the
looked
weekend.
at selling a $10 wide iron condor, $10 wide spreads on each
85%
side,
up on pack
and
W.
only $10 wide in terms of the short strike. So this is even you know, a little bit more aggressive than I probably typically would consider. But with heightened implied volatility, with all the stories surrounding this, it doesn't really feel like anything's going to be big enough.
Barbecue
this
just
might move a lot.
wicked down
it might
there.
Not move a lot. Like it just
I
seems
mean,
like
it's
very
got such a
binary
wide
right
spread
now. It might do
and
both. It might move significantly
pretty illiquid
upside, only to
without
come back down, or vice versa.
beef off
and so I
and
wanted to be aggressive. I
huge
wanted to collect
FT
a
and all the
chunky
acronyms.
credit with this trade illustration and surround the stock with that and look for either implied
doesn't
volatility
mean a
to
whole
come
lot.
down, or ultimately an unchanged
because the range can just
totality of
snap
the move
pretty
over
easily.
time. It's a 3-to-2 risk-reward ratio, so it's a $10 wide spread, but we're collecting $4 here. And so if you're able to do that, it actually reduces the risk down to 600, so still a little bit more risk than the possible reward. But in turn, that typically coincides with a slightly higher probability of success than failure on this. 126 to 144, the break-evens. So you do
Ocean's up
also going to add
6.25.
that credit into those short strikes to increase that window of profitability. But really what an investor would hope for here is they have risk definition. So that's not going to completely, take away the fact that you don't want to lose money on a trade, but you do, because of that, maybe have a little bit more staying power than if you just sold a straddle or a strangle or undefined. Hey, there's a good chance this thing tests both sides or goes completely through on one side. You're just hoping that at some point over the next 40 days or so, this thing finds its way back in these 130s, and you can hope to buy this back for less than $4.
Yeah, let's go through that trade. Selling the Iron Condor, $10 wide on each wing in the June cycle. So you've got 42 days till expiration. Selling the 140 call, buying the 150 call, and then on the put side,
GME
selling the
below
130
VWAP.
put, buying the 120 put.
At
Collecting that
$12.30.
$4. It's probably
Day,
trading
it's
$4.10 now.
like so much has
$4
happened in
credit, $600
much
in risk,
time.
as Alex mentioned. You mentioned those break evens. Kev, you got $10 down to the downside on the break even, and then you've got about $6 to the upside on that break even. So it's a pretty wide one, but aggressive.
And take a picture, guys, because I'm going to go to the chart. For not very often do I go to the chart, as you know. But if you look at the lower moves in JP Morgan lately, it's about 126 and change, just above Alex's break even on the downside. If you go to the top of the move, 144
9%
and
on
change.
Newell. Yeah, usually I try and avoid stuff, dividends with that high.
So he's got
dividend stock that have yield for the long term, like maybe a little bit over 5 if it's something I'm familiar with and
so it's a well-designed
has a good track record and
Iron Condor, taking into account not only the probabilities,
I'm really not
but the
very
chart
familiar
as
with
well,
Newell
guys.
or IEP.
I was going to say one last thing, and we kind of learned to to think about selling volatility strategies when volatility is higher. But when volatility is higher, things move around more, and so you kind of got to correlate risk and reward to that as well. Like, this is a name, like I said, I can't stress this enough. There's a good chance this thing moves tremendously. Right. And so for that, I wanted to collect a big credit. And so you want to be paid for the risk that you're taking, and then risk definition allows that staying power, knowing that worst case outcome
it's still melting
allows
up
you to
here,
sort of weather that potential
16.8%.
volatility storm if it were to happen.
Yeah, you got a month and a half
When
in
it makes
this
such big
position,
moves.
so you have some duration on this. Time decay
Really
works in your
crazy.
favor, or theta, as the
It's
value
just
of
like the
this
swings on the
loses
stock are
on a daily
large.
basis into expiration over the next 42 days.
Probably pretty good for trading.
But you've got some
I don't
assignment risk
trade
on
it
those
that
short
often, but
options also into expiration over the next 42
like
days.
a little
All right, thanks to
mini
Alex
Tesla or
Coffey,
something.
senior equities contributor here on the network, helping us
Not
break down
nearly as
markets
liquid, but
and JP Morgan. But coming up after the break, Kevin and I are going to be joined by Megan Brantley from Likefolio for a discussion on eBay, which has consolidated recently, but is still up about 9% so far in 2023. Stick around. Fast Markets coming right back.
You heard of Newell through barbecue, didn't you? Yeah, that's the first I've heard of it, at least. All I know of Icon is just like a documentary I watched and just some articles, I guess. BAOS 40%. Is this up? Yeah, I'm moving back up a little bit. Fubo's still hanging out up there. RP Elmer's Glue, Sunbeam, Mr. Coffee, Crackpot. GME below VWAP now. SEC investigating insider trading by First Republic Bank executives. Russia is likely to resume buying foreign currency for its reserves as soon as this month, as rising oil earnings stabilize public finances by US and European sanctions. The labor force participation rate among 25 to 54-year-olds has moved up to 83.3%, the highest rate we've seen since January 2007. That's crazy. What happened after that? Great financial crisis. Recession. The Great Recession. U.S. sets $500 million for Taiwan weapons under fast-track plan. L'Oreal Rubini says a hard landing, recession, or entrenched inflation are the only two possible outcomes. Elon Musk has called out the Fed more than 20 times for hiking interest rates too much. Tech workers are reportedly freaking out over whether the end is here for 500,000 plus salaries, given the rise of AI. Yeah, PacWest RIP is the highest on record, 83%. Yeah, it looks like it's maybe getting to a top. I'm gonna look for just some that high IV. Oh, halted down? Come on. Let's just get into it. Get those high IV. Can't. IEP is ripping 27% now. Breaking out. Wow.
like luxury and things like that, and helping to kind of refine their brand image, which I think has been definitely needed. And another thing
Apple
that,
for sure.
That people tout that they do well is
nice
this
top on Apple to
authentication.
short.
And I think that's an area where, say, you know, an e-commerce peer
Probably
like
till next week.
Etsy
No reason to have it over the weekend.
struggled of late into making consumers feel confident that when they're purchasing something, they're purchasing.
I saw your
a
DXF. It does look
so
pretty nice.
That's something that eBay definitely needs to keep up. But near term, we're not seeing that near term traction that we would like. When we look at overall e-commerce mentions, those are down by about 7% year over year. And so this is just really a loss in momentum. We're seeing kind of a shift and a decrease in those, you know, shopping online mentions. A lot of consumers preferring to go in stores, a lot of consumers preferring to hunt around for deals and things like that. But and then just from a demand perspective, we just haven't seen any improvements in that weakness, especially in the month of April. You know, I said we're down, pacing down about 20% year over year. When you look at just last week, so just, you know, the first week of May, we're down about 22% year over year. So definitely some weakness in discretionary spend that I think could be a near-term headwind for eBay. But long-term, it is positive to see consumer happiness levels above 80% positive, and even higher than that of Etsy, who used to have kind of a niche advantage. So, you know, I think that you could look at this two different ways depending on what your time frame is.
Yeah, and that I think is the caveat for this company as they kind of turn to that authentication that you mentioned, Megan. You know, as far as, you know, trading cards, they have like a vault that you can store things in. And then they authenticate more higher end products to kind of focus on that more resilient consumer here. But, you know, post earnings, the stock jumped a little bit. Do you guys have like an earnings score now on this one with, you know, earnings already passed?
Yeah, so right now our earnings score for this is a -40. So that puts us in the bearish camp, and mostly just because, you know, we are seeing this real-time data come through, and we are seeing some degradation in consumer demand, and we actually do see that accelerating. So for us, that's a little bit of a warning, and we don't like the larger scale, you know, macroeconomic headwinds if we still see consumers who are talking about, you know, pulling back some of that discretionary spend, which could continue to be a near-term headwind for eBay.
Yeah, definitely with that GMV decreasing also. All right, Megan, great stuff as always. Appreciate the data. Hey, real quick, do you have any tips on the Kentucky Derby for us here before we let you go?
Oh, is that this weekend?
So, well, I don't know how in depth you want to get, but my favorite way to look at the Derbies, I love to look at the jockeys. You can see, you know, you have lots of jockeys that are, you know, riding multiple horses throughout these couple of days, and so you can kind of see whenever jockeys get hot. So that's my own personal take on it, but everybody has a different spin. It's fun no matter how you play it.
All right, looks like I got to do some research before that race tomorrow. All right, great stuff. Thanks, Megan. Have a great weekend.
That was me. I picked up some DXF shares.
Megan Brantley, Vice President of Research.
There you go, Mysterious Nike. Leave me alone.
Breaking down the data for us.
I like the chart,
eBay.
honestly.
Kev, GMV was down 5% on a reported basis last quarter to 18.4 billion.
So
it continues that direction that they've done. Now they've done some cost
You're doing a pretty good job pumping it, so.
Also, Kev, but then they're also spending to kind of grab that consumer. What's your take here on eBay? And you got an example trade for us.
The good news is the GMV decrease that we're talking about is starting to dissipate, and it's down to relatively small numbers, and their revenue is actually increasing by better numbers than their GMV. So this might be a turnaround story. If you think it is, Tom, it does have a 2.2% dividend. That's not guaranteed, as you know, but they do have a nice dividend. So what I did, Tom, not a big premium name, as you know, in some of the options. So what I did, Tom, I kept it pretty simple. You can sell a cash secured put, or because it has the dividend, you could do the covered call strategy. And so what I did, Tom, I went in and bought the stock. I went out to the May expiration and sold the 47 call. The expected move out to May expiration is about $2.
That ain't bad.
So
Happy Friday, Passing Cloud.
Call, doing that right at or around $45, Tom.
Friday.
This has the same
GME, right?
graph,
VWAP still.
Graph on the risk profile as a cash secured put, but this one, you would do this, you would choose this over a cash secured put because of the dividend, Tom. But like I said, like we talk about all the time, not guaranteed.
Yeah, dividends, if they get paid out, 2.2% dividend yield on this one, Kev. Let's break down this example trade. For every 100 shares of stock you buy, you sell one. And in this example, the May
30%.
47 strike called nearly a couple bucks out of the money to the upside. Your break even is what you pay for that $45. You got $4,500 in risk in case that stock
probably getting to a top here. It looks
zero,
like.
But this type of strategy
over
the next 14 days,
1.
you'll have that ability if the market's open, liquidity is provided, that you can buy back that short call, adjust it, or roll it out to another weekly or monthly series. On this one, but a covered call. It's, Kevin, I always look at this as a paid to wait type of strategy. Is that the way you look at it? Because you're collecting yield on the short call you're selling, but then you're also collecting yield on the potential dividend, right?
Yeah, exactly right. As long as you keep that short option enough out of the money.
Barbecue maybe moving up. I might pick up some shares actually also here.
Ahead of the dividend. That could easily happen and get your stock called away. Make sure you keep
Might
that
not get
option
a
sufficiently
much
out
lower
of the
of a
money,
test here at
or
1060.
roll it before the dividend date and extend your duration. But yeah, this one, the 47 call is trading right around between 27 and 30 cents, Tom. You could go more aggressive if you want, collect a little more premium, but this one is in line with the expected move, Tom.
Yeah, and you do cap your gains on a strategy like this where you don't think maybe the stock's going to, over the next 2 weeks, grind above that $47 level. So keep that in mind when you're picking your strikes against your long stock if you're looking at covered calls. All right, great example there in eBay. But coming up after the break, we're going to take a look at Goldman Sachs, which is down about 5% this week as the financial sector has struggled despite today's bounce. Fast Markets coming right back after this short break.
Barbecue popping up. Back to 1138, up 7.5. Might have been it. That might have been the double bottom right here. I'm gonna test at 1030, but Russia is likely to resume buying foreign currency for its reserves as soon as this month, as rising oil earnings stabilize public finances despite U.S. and European sanctions.
Larger, broader basin representation of 2,000 stocks there, again, hanging in there. And the broader market here, I think, also.
Yeah, GME ball flag is nice.
Focusing on the positive, Tom.
Yeah,
so
the regional bank sector as a whole up over 6% in today's session. But Ben, dollar, you know, it's been creeping down. It's still in a downtrend right now, but yet
9%.
to break that level that we saw a few months
You're
ago.
a bit late,
your thoughts here on the dollar?
Yeah,
does that lend support to equities if it continues to fall?
Yeah, that's that April 14th.
And right, this resistance from back here and here.
Spot 42, and we got down to 100 spot
breaks out of here
to this week. Today, a little bit of an interesting kind of
has legs get up
disconnect
to
between
like
what we're seeing. Rates to the upside, dollar to the downside. The dollar has been somewhat range bound. Tom,
kind of at the
lots
high.
going on here with the U.S. dollar this week. Central bank activity, the ECB. We had obviously the FOMC raising rates, the RBA with that surprise hike by 25 basis points from all three. Next week, don't forget about the BOE. Wanted to point out there's lots of other currencies to keep an eye on, though, not just the U.S. dollar. Our neighbors to the north moving higher. The Canadian dollar spiking after a strong jobs report there today as well. Double what was expected. And then lastly, look at the Mexican peso.
Barbecue back to 1140.
Making a new high for the year. I mean, we've got multiple currencies on the move ahead of the Bank of England next week. The British pound at a 10-month high headed into that, Tom.
Oh
Mexican
no,
peso,
Alta going down
against
again.
the dollar. All right,
we suck again.
Everything across the board there. All right, thanks to Ben Lichtenstein.
Got distracted with such long halts.
Breaking down markets and the U.S. dollar. But now let's bring in George Tillis, senior markets correspondent. George, we're talking financials today. We're going to hit Goldman Sachs here. It seems like they did improve revenue in its assets and wealth management business, but if you look at two of their core major money makers, IPOs and M&A activity, that's basically dried up, right?
It has. I mean, if you look at when they reported earnings back in April, they talked about how their deal-making fees and, of course, investment banking fees were down about 27% year over year, and that's because, of course, as you mentioned, IPOs have been lackluster since the bear market, which began, of course, in early 2022. It's created a situation where there's less supply now, and of course, IPOs being brought to the market. But at the same time, I think if you look at the banking sector, there's obviously quite a bit of dispersion going on from the stronger versus the weaker banks. Now, Goldman Sachs, which is not necessarily a depository institution, from the standpoint of requiring deposits to fund either lending or, in this case, institutional deal-making services or even wealth management services. Goldman Sachs's capital structure is really focused on financing through debt and equity, not necessarily deposits. So I think the deposit flight risk associated with this particular business isn't necessarily there compared to some of the other regional banks, which are highly reliant on deposits for their source of capital funding. And that's one of the reasons why Goldman has actually held up quite well, despite the deal making, as you mentioned, down on a year-over-year basis. I think fixed income trading, commodities, and currency trading have actually been very robust for Goldman Sachs. I think they dealt with higher interest rates quite well, especially from their portfolio.
I picked up some PAC W
management
puts.
standpoint.
These are just basically a small YOLO in case they default this weekend.
Division, which is actually a very small portion of their total assets. Some estimates have it around $5 billion or even less than that, but they've been slowly selling that off, which is actually probably a good thing considering there's some challenges in consumer financing and credit card lending right now.
George, is the street getting Goldman wrong on this fixed income currency and commodities? Because, they missed on the revenue projections. They were looking for 4.16 billion, came in 3.9 billion. But the comps year over year from Q1 of 2022 were massive because they dominated fixed income currency and commodities. Solomon, their CEO, came out and said, we're active right now in that market. So between 2021 and 2023, only Bank of America and Goldman grew fixed income currency and commodity revenue. They're dominant in this space. Is the street, I guess what I'm saying is the street getting it wrong selling them off when they're going to have a good quarter in FIC this time and going forward, and this other business is it's cyclical. It's going to come back.
Yeah, I see your point, Kevin. Look, I want to say, if you say the market getting it wrong, just look at comparisons. I mean, overall, JP Morgan, Goldman Sachs, they're down, but they're down not that much relative to where they were last year, even on a year-to-date basis. They've been holding up quite well. So I think the market's actually priced it accurately.
Busted up through that level.
The robust strength in their fixed income portfolio
1150,
is very resounding,
8.5%.
resoundingly strong. They're not necessarily holding, if you will, fixed income as available for sale like a lot of the banks that are in trouble right now. They're actually actively trading and managing a portfolio of fixed income assets. So I think the market is pricing them fairly based upon the challenges that are going on in the interest rate environment we're in, but also the entire banking sector. I think if you look at it from a return on equity standpoint, I mean, if you look at the last quarter report, Goldman actually bought back about 2% of their total shares outstanding in the quarter. If you annualize that, that's about 8% per year plus a 3% dividend. So the total return just in, of course, share buybacks and dividend yields about 11%, which is quite a bit higher than, let's just say, the risk-free rate of return right now. So I think the market has got this one accurately. I think their company is very strong despite the challenges in their investment banking division. But I think, when it comes down to the risks right now, it's deposit flight. And the Goldman Sachs really doesn't face that challenge relative to some of the regional banks, which are highly needed deposits for their
I'm picking up some shares here.
Loans.
That's why that candle went back down.
Last quarter, they announced they sold
crazy.
25% of their Marcus loan book, with the other 75% marked as held for sale. So trying to get some, some stuff off their balance sheet at this point. All right, thanks to George Tillis breaking down Goldman Sachs for us here today. But Kev, when you look at this company, maybe it's been oversold a little bit due to the fact that, the whole financial industry can drag a stock down, whether it's warranted or not. So I wanted to look at this from a strategy perspective. If you think maybe Goldman Sachs is going to maybe consolidate, grind a little bit higher, came up with a strategy for this one. Shorter time frame, about 28 days till expiration, Kev. So my example trade, I looked at the June 2nd weekly option series that expires in a month, and I looked at an unbalanced call butterfly here to kind of offset some of the costs on, the
inverted head and shoulders.
Part of this strategy. So going out to that June 2nd weekly cycle, buying
head and
one
shoulders,
of the 325 calls, selling two of the 335 calls, and buying one of the 340 calls. You're paying roughly about a 320 debit on that one. It's trading closer to 310 right now, a little bit less. But if you pay 320, there's going to be a risk, $320 per spread. Your break even up to 328.20. Kevin, on this one, that's about $5, $4.50, $5 above the current share price here. Your thoughts on this one?
A lot of the arguments, Tom, against using a butterfly is that if you get the big move through your strike and it makes a big move, you make money, you lose money, right? It goes away before you can, before you can defend it. This takes some of that out because you're doing a long $10 spread, short a $5 spread. So directionally, on the upside, if you do, you're insulated from losses on the upside because one goes to 10, the other one can only go to 5. So
obviously, I'm not playing that in earnings. Chart looks nice though.
The 335 strike, that's
about
$12 above where it's trading right now, Tom. So
13.
The risk is about, or the
I'm
duration is about 4
not very
weeks.
optimistic for a run today.
Theta yet. It's pretty flat,
barbecue.
less than $1. But if it goes into that range, the theta will, theoretical theta.
Seems like this is maybe a double bottom down here at 1080.
But this is a bullish play using the butterfly.
Didn't quite get to that 1030 level.
The template, but
guess it's good. Higher lows.
It to the upside, it's got about a 9 delta.
Yeah, it's good. I just
yeah, and that at apex of profitability is
didn't quite get my entry on it because of that. That's okay.
Call, but even above
looks bullish now.
340, Kevin,
green over the 9.
You're
It's
still going to make nearly a couple $100 on that one. So this is that type of strategy where
I have an order for wall puts, but I don't think I'm going to get
filled. Up towards
it's not as good. I like the
but if it continues
ACW because they have down to 50 cents.
You can still remain
wall doesn't have them that low.
On that. Kev, we just got a couple of seconds here.
I'm just looking for all the way out the money, basically.
Going into next week, what should investors and traders be focused on that might be market moving?
No, I don't. We haven't seen that in a while in 45.
Headline risk for more regional banks,
I'm thinking because
next week, Tom,
we've seen it. We've started to see it this week, and TA is started to turn this around.
Wednesday.
We saw it pre-market yesterday.
Be the big ones,
this move right here had volume, and it was like 2.5% gap up on GME with volume. And that was without the SPY. And then the day before, we saw this morning volatility also. It was looking squeezy. So that said, also we have, on the daily time frame, we've got this RSI divergence, and then we had that hammer candle. Which is bullish turnaround. Didn't fully fill the gap, but doesn't have to. It's bouncing on this level. And we've basically just started to run since there. So today's move, I think, is just, I don't know. I think it could be the start of a rollover of swaps, the cycle. It didn't look squeezy today, but definitely something we haven't seen in a while. So at the very least, I think it's maybe some insider buying. But I picked up a lot of calls today actually on it. I had some. Had some that I picked up this day just after seeing the chart, and those worked out all right. They really didn't move much at all though. And I got some more. I closed those and actually got shorter dated ones for first week in June, 2022 or 22 strike. And yeah, we'll see if those can move. But yeah, I mean, we're about to see a cycle right now. Coming into SLD. A rally into SLD and then OPEX, that's like 2-3 weeks of upside potentially. So I'm not sure. We haven't seen like an IV spike on GME even in a long time, and I don't think that's what this is because IV hasn't even really spiked. Like it's still very low. The calls I have are 67% IV. That's before like 2 months ago. That would have been 3-year low on the IV. So I think this IV can double quickly. Barbecue's popping up there. 1180 up to VWAP. I got filled on some shares on barbecue, not nearly what I was trying though. All SPY is also moving up. Volume IV has been so low, yeah. I mean, it's still low. The volume is still low. It's a lot better than yesterday, but it's still very low, and the IV is still very low. So if we do get a move, and we get the IV back up into the 200-300%, like we've seen on cycles, that's a huge gainer for those options. Yeah, barbecue 1080 looks like a nice buy if you can pick it up there. Still have quite a bit of time though. Still, what, 3 hours left? 25. I mean, on GME, like, I don't know, man. If it's just 25, yeah, if we're looking at like a cycle, like an actual move, those are like big 35, 40. So I'm not sure if that's starting, but it's looking like it might be. Your 20 calls hit 1,000%? What, for weeklies? What calls hit 1,000%? With a 4% move? What you talking about, Willis? Hey, Mr. Style. Ooh, got more fills. All right, got my barbecue. Got barbecue lit. I look for some more if we do get a drop a little lower than 80. Ivy's been low for like 3 months. Go throw some screenshots in Discord. I don't believe you. Just moving up. Megal. These are over, man. Over. Over. You're gonna get some spikes and some bounces, but it's over. Might come back in 6 months. See the cyclical pattern? It takes time. This was January. This is 5 months later. Before that, you had a little move here. 2 months. 2 months. Of course, the IPO and all that. With the GME, with the options chain and what you got on them is totally different. Whether they moved 1,000% or not is a totally different scenario. But yeah, I don't even think any moved 1,000. I mean, if they did, yeah, maybe you had options that moved 1,000. Did you make 1,000% on options on weeklies on GME with a 4% move on the stock? I don't believe it. Heck yeah, Megal's dead, man. Look at the chart. It's gonna have bounces, but it's on its way down. Maybe it'll come back in a few months. These Chinese stocks, they don't just going. They're pumps for collateral. And we oftentimes see them before a rip on the basket of stocks that has a big short position. Let me show you a little write-up that actually puts it into picture form. August 2nd, HKD peaked. August 2nd, BBY was at 579. August 17th, BBBY peaked at $30. See, they pumped the Chinese ones first, they drop down, and then we get this huge basket of shorted stocks rallying. January 5th, HKD peaked. January 5th, BY is at 169. January 12th, BY peaked at 5. April 28th, top peaked. So this is speculating that top was the one. 28th, BY was at 10 cents. And 50 days from now, we'll be far away from 10 cents. This was only 21 hours ago, so. But this correlates with GME also. I don't know if top's the new one, but we're seeing all of them pump. This doesn't specifically have to be HKD. It can be any of these Chinese stocks, Chinese education. I don't know. What are you doing? Knew it was coming. Knew it wanted it. 1.5% on the list buy. I don't see any screenshots on my Discord, M45. said no up GME, I'm back in it. Okay. Well, the Discord is linked in the comments. Don't be scared. Been so long since I've seen 1,000% gainer. I don't even know what it is anymore. That moving the decimal place once? Yeah, I think it is. All right, yeah, these did go 1,000%. That's crazy. You timed it right. If you bought them right at open, bought just the right strike. But I don't think you did. But I gotta see Discord. Gotta see a screenshot. These actually did a lot more than 1,000%. They did almost 2,000%. And yeah, you could have gotten filled. It wasn't like a market maker error or something. It was legitimately people. There were sales. 840 volume. Why you don't buy in that morning rip? That's why it's like always. It's hard not to, but you just can't buy it there. That's when you want to sell. You got them yesterday? Oh, it's getting a little more believable. You got weeklies on GME, out the money. Expecting a run on a Friday on GME is even stupider than everything I've just said so far. You should be rewarded for your stupidness. I'm glad you got 1,000%. What'd you miss? Looks like barbecue kind of double bottom there. And
the freight business
has been kind of rallying.
Something that these companies have struggled with is how to do this profitably,
back up to the high of the
and
day.
actually make money for their investors. And so if you got more ways to monetize your drivers, maybe that'll help in the long term. But right now, there seems to be a clear divergence between how these companies are being treated by the street. Going to say down boat, though, for Lyft as well. Stocks in the single-digit prices, so something to watch there. But it's come back from it before, but getting back down towards those lifetime lows.
It's off on Fridays. Remember, she's so smart.
Next one, though,
she doesn't like to work Fridays, so she doesn't.
For this one, but wow, what a move again for this stock as it just is surging here, and finally,
that's right.
Some green here to go alongside the moves that we've seen in Bitcoin this year.
Yes, we have such huge movers today. Coinbase up more than 17% after posting a smaller than expected loss. I will say this is yet another company that has been dealing with cost cuts, including layoffs in the quarter, and it looks like some of those actually are paying off. The crypto trading platform posted a loss of 34 cents per share, which, as I said, was smaller than expected on revenue of $770
We haven't seen her at all today, actually.
That represents a decline of nearly 40% from the previous year, but still higher than analyst expectations. As you can see, analysts were expecting around
BBBYQ's money gotta go somewhere.
Also a big improvement.
So now BBY has apes, and they're making money. They're putting it into GME.
In part to that heavy cost cutting, including those layoffs that I was talking about. Total operating expenses actually declined 24% from the prior quarter. Also, of course, boosted by a rise in crypto assets, as you said, Bitcoin up.
Viewership's down, and he's very flustered and nervous. You can tell in his voice. He's just upset, you know, and overall like bad demeanor on him.
Cuts from the street. But analysts still largely cautious on this name. The majority have hold ratings. The median is now about $63, so that's about 10% upside from where it's currently trading. And I will say, in the bear camp, we heard from Mizuho, which maintained its underperform rating, $27 price target. The analyst there points out that it's reliant on riskier revenue sources, of course, things like, you know, trading small crypto tokens and more yield-based products. Also, Wells Fargo called the ongoing regulatory issues a major roadblock for the company, so keeping its underweight rating, $43 price target. So not necessarily out of the woods, but definitely high, you know, seeing a big boost from the earnings today, up about 17% and actually up about 63% so far this year.
Yeah, and obviously, Caroline, as we look at this one, it certainly, you know, there's still some alarming things here with
see how aggravated he sounds?
declines in trading volumes, actually worse than expected on that front, but they were able to be a little bit more efficient, make a little bit more money on the volumes that they got, and I think that seems to be the key takeaway here on this. But those volumes falling about 50% year over year is still quite alarming. So we'll see if crypto gets some excitement back as this Bitcoin pushes back towards 30,000 per coin here. Next one is Expedia. We've been waiting for these names to, you know, show a little bit of upside excitement here, Caroline, as we've heard so much about the change in spending patterns from goods to services. We got a little bit of an uptick here today in Expedia.
Spies are making new high. Dang it.
Well, typically a 3% or 3.5% uptick would actually be pretty impressive, but compared to 17% like Live Nation and Lyft, or I'm sorry, and Coinbase, not necessarily. It seems pretty modest. But yes, and it's interesting because Expedia actually missed analyst expectations, but Booking Holdings, its competitor, beat analyst expectations and is moving in the opposite direction. And that really has to do with the fact that how they had performed so far this year. Booking went into the results up 25%. Expedia was only up modestly. So it's getting the boost today despite actually missing on both the top
I know, I
and
thought
bottom
about that
line,
at birthday
20
yesterday.
cents per share. Missed analyst
Oh my
expectations. They were
gosh.
expecting break even, actually. Revenue rose nearly 20% to $2.67 billion, driven by increased international travel, major city travel, and the reopening in Asia, but that was lower than analysts were expecting. Gross bookings rose 20%. Lodging bookings hit record levels at $21.1 billion. On the call, Expedia said, while economists continue to debate potential recession outcomes, and clearly many unknowns are still out there, consumers have so far
I'm my short up here.
and continue to travel.
I realized I could get more.
Maybe cutting back in other areas, but not in terms of their travel
Ooh,
budgets.
scary though.
Several price target actually cuts in response to these missed results.
Have a
Credit
bull flag.
Suisse lowered to
I want a
172,
time frame.
Barclays to 113. Both of those analysts in the buy camp or equivalent. Mizuho is neutral, cut to 110. D.A. Davidson also neutral, trimmed to 109. Analysts definitely more split on this one. There's 15 buys, 15 holds, 1 sell. And the median actually is 120, so about 30% upside from here. So inching a little bit closer to that level today, up about 3.5%.
Yeah, and I think once you go through the numbers, it explains sort of what feels like kind of a mixed reaction given the strength that we see in the overall market here. You don't have a surging stock, but you have a modest upside move. It seems like a lot of the strength came from B2B being a little bit better than the retail segment.
Barbecue
we also
Go-Go.
see, of course, those gross booking numbers
So
were a
good.
little bit better than expected.
Like this double bottom is going to
kind
hold.
of a head scratcher when
1080.
you look at you know,
didn't make it
the
down to the
inefficiency
1030.
with the pretty big miss
couldn't-
on earnings. So
couldn't quite
we'll
scoop
go ahead
up.
and say upvote for it, though. We'll
Had to
talk both
chase a
these
bit,
names
get it around
a
here.
little bit more. We'll explore the technicals with Rick
I still have
Ducat,
orders for
our
down here too,
Chartmaster.
though.
Right after this short break, stick around. We'll be
Still have
right
a couple
back.
hours left. Chicago has signed a contract valued at $1 billion to sell its water elsewhere. First such deal in 40 years. Chicago selling its water? What's going on? 91% of companies want to hire workers who know ChatGPT. What's there to know? Ah, back west, bounced on VWAP. flat GME is on VWAP, dude. That's crazy. With 86% of companies now reported, S&P 500 GAAP earnings have come in much better than expected, flipping the year-over-year growth rate back into positive territory. Plus 6% year-over-year for the first time since Q1 2022. Average cost of Russian crude landing on Indian shores in March hit the lowest level since the South Asian nation started lifting discounted barrels from Moscow after its invasion of Ukraine last year. Wow, this is very confusing. Log into Insta?
Well, there's a few things that we should keep in mind, but let's backtrack a little bit and see where how we got to this point first. You can see that in the broader scope, we were within more of a triangular pattern here, demarcated by these two blue dashed lines here, one going across the lows, one that is much steeper, and one going across the highs that's a little bit more shallower, starting with earnings all the way back in July. So we can see that we transitioned from being within this triangular pattern to being in more of a falling wedge type pattern in the short term, one that was quite narrow and steep and encompassed a notable decline in shares here. Today, though, we are moving to the upward. You know, we're up 16.5% on the day, so that's quite sizable here. However, we haven't really made our way into any kind of new uptrend or anything like that. We also are stopping short right around the 21-day EMA, coming in right around 57.50 here. So that'll be a notable point to see if we can make our way above heading into the close. If we don't break that level here, that could be a bad sign for the bulls here, that we couldn't crack above this shortest of our three moving averages that provides us with some level of resistance here. So we can see also here RSI, our measure of momentum, is also showing something that's not necessarily great news for the bulls. We didn't cross above the 50 midline here. So that means that momentum is still tilted toward the bearish side of the spectrum. What you'd really want to see if you're bullish would be a clean break above that 21-day EMA, as well as a push above that 50 midline in the RSI happening at the same time to kind of confirm the price action that the momentum is following suit here. So if we do manage to break above this yellow 21-day EMA, we've also got our orange 63-day EMA right here coming in at around the $60 mark. So that could be another potential stopping point here if price continues its climb upward. To the downside, the first thing I would be perhaps looking at would be making sure that we hang on to this level here where we opened up, right around the $54 mark. That'll be a key level to hold going forward. These gaps you don't want to see, if you're bullish at least, you don't want to see price retrace and fall below where the gap opened up here. That would be not a great sign for bulls. So 54 to the downside, and if we do break through that, look for it to touch this trend line once again before
it looks like it wants to break out.
Finding some footing.
Okay, thanks, Rick. Shifting to you, Alex. So some bearish momentum, no real uptrend in the making, according to Rick. How could someone think about trading Coinbase, also given the fact, as I said, that analysts largely more cautious on this one, although they take a longer-term approach? What would your example trade be?
Yeah, I think you just got to look at it in the scheme of in the sense of the fact that the stocks had a massive move higher today. Oftentimes after earnings, you'll see sort of an acceptance phase as it kind of moves into a new price level, and then the market kind of figures out where to go, next from there. And so, I think many investors are going to look at this one optimistically today with the stock making a big move. So I looked at something that was in that light, but also acknowledging that you have those resistance points to the upside that Rick had talked about, the fact that the stocks had a massive run off the lows, and it just made a really nice pop here today. It's in the neutral to bullish trade illustration camp here. So we're looking at selling a put vertical below the market. In particular, we're keeping this very, very short term. We're just going out 2 weeks from today to the May expiration, the May monthlies, and we're selling the 54.51 put vertical. This is a function of pricing more so than strikes when it comes to strike selection. That is exact. If you're able to collect $1 on this, it's exactly 1/3 the width of the strikes. And this was the level in which that could take place when I was looking at that. And so break even would be 53, max profit would be $100. Again, it's neutral to bullish, $200 in risk. The risk profile, of course, pretty straightforward. With this type of a trade, the best case scenario is that these options expire worthless. Well, where is that most likely to occur? Well, that's most likely to occur if they're out of the money on that expiration date. And we know puts, of course, are out of the money if they're below the market. And so in this case, you just basically want this stock to hold its value. You're not asking for anything more. You prefer nothing less. You do have a little bit of cushion here, about $3.50 to the downside. But with the name as volatile as Coinbase, that might not be enough. So this is one that's just really hoping the stock just settles around here, if not move higher, Caroline, on this one.
All right, so let's shift from one upvote to the next. Moving on to Expedia. Just a quick reminder, Expedia obviously out with quarterly results. Missed. They reported actually a surprise loss. Revenue rose 20%, but still managed to come in below expectations. Yet, Rick, investors giving it some love today, actually adding to earlier gains, up more than 4% right now. But this is one, as we talked about a little bit earlier in the show, hadn't really seen all that much love for investors this year. Only up about, call it 6% year to date. What specifically stands out to you for Expedia?
Well, the first thing I noticed here is that we basically are winding up back within the middle of the range that we're in. So kind of on one hand, you could look at it as being a nice move up for the bulls. We are up about 4% on the day. On the other hand, kind of a disappointment because we didn't break above our old highs with any strength or anything. We made some intraday highs above our 63-day EMA and the top of our channel right here, our very mild downward channel, but we couldn't hang on. We fell below those points. We also fell below our volume profile point of control. Once again, this thick red line that denotes the area of heaviest trading. Now we're finding ourselves back near our yellow 21-day EMA. So this level right around the $93 mark, $92.90, let's call it 93, will be important to hold heading into the close here. More recently, we can see that we did break through this downward sloping trend line in blue here, but it's just been largely sideways ever since late February. So if we are able to get our act together and start climbing upward again, which would be counter to what we're seeing in terms of our moving averages. All three of our moving averages are trending downward, and our faster ones are below the slower ones, and they're diverging apart. So that suggests the trend is still overall pointed toward the downside here. If we are able to start climbing back upward here, this level, once again, right around 97 here, just below the 97 mark, will be the point to watch to the upside. The more times a support or resistance level is tested, the more significant it becomes. And we've had some trouble getting above this mark recently here. So this would be a place to be watching eagerly to see if we get some kind of upside breakout.
Oh yeah, SPY looks like it wants to break.
Situation to the downside here. If we start slipping below that 21-day EMA, we've bottomed out numerous times near about the 89 level or so here. And I chose to portray this as a downward channel because we're making lower closing highs and lower closing lows here. So very, very mild downward channel here, but still downward nonetheless. So if we do break below that $89 mark, that could be significant because that could propel us down toward these yearly lows once again near 84. So that's kind of the lay of the land here. We had this earnings move. We are gapping up significantly, but we're really still within the confines of this range between about 89 to 97.
All right, we'll keep our eyes on those levels. Rick Ducat, always appreciate you breaking it down for us. Thanks so much. All right, Alex, so Rick laid out the technicals for us on the charts. How could someone trade Expedia?
Yeah, and so obviously not the same amount of follow-through that we had in Coinbase or some of the other names that we looked at like Live Nation today, Caroline. So this one a little bit more of a modest move. And so for the investor who saw optimism in this report, sees maybe more upside in the future, I looked at a strategy that would benefit from that taking place, let's call it over the next month and a half or so. So what I did is I went out to June and looked at that 100 call strike. But in order to make that a little bit cheaper, created this into a call calendar, selling its May 100 counterpart alongside it. That call calendar, the whole package goes for around $1.75 debit. That would correspond, of course, with the total risk on the trade at 175. This is a bullish strategy, but if we look at the risk profile on it, what it'll illustrate, though, is it's really more of a strategy about picking a level that you could see this stock going to and then possibly staying there. As if you look at this risk profile, it peaks out at the strike, and then it actually starts tailing off if you overshoot it as well. So I think of these strategies more as a precision type of a situation and more about the individual trader's outlook. So for this example, we looked at the 100. It's a big round number. It's a little bit above where the stock's currently trading at here, Caroline. But this could be easily customized to better reflect a different outlook. Someone who's bearish may look to a strike below the market. Someone who is looking at Rick's technical level may look at something like 89 to the downside or 97, for example, to the upside. But again, this is just one way to look at it, the 100 call calendar. And you can see you can overshoot to the upside, and of course you need something to happen, a move towards those strikes to ultimately be profitable on this. But it is risk defined, and that risk is limited to the debit spent on the trade.
All right, thanks so much, Alex. Going to take a quick break, but coming up next, we're going to talk about Apple after earnings. It's up more than 4.5% after a beat on both the top and bottom line. We'll be right back.
Oh, Bullard's talking. That's maybe causing the market to rally some. Don't see much happening in the near term on a central bank digital currency. What? Wholesale egg prices are now down 70% from their peak back in January. Should see a significant move lower in food price in the next CPI. SPY breaking out to the upside here. Bullard says should not have recession as a base case. Slow growth, declining inflation. This moves puts Fed above 5%, but there's a lot of inflation in the economy. Bullard thought quarter point hike this week was a good next step. SEC issued its largest ever award of nearly $279 million to a whistleblower. They're not even finding the people that they are whistleblowing about that much. Oh, I didn't realize AMC released earnings today. Oh, I was down. A nice smooth uptrend though, look at that. BBQ. Barbecue. Still the same spot. 623. We've got 1130 on the bid, 1180 on the ask. So freaking widespread, man. This is your ask up here. Bids right here. Both of them are above the price it's showing right now. That is interesting. Moving up here, about to be high of the day. Yeah, I think we're already in a recession, Cameron. Based on what we've defined recessions as before. But yeah, I think it could get very, very ugly. Like, not even something you want to talk about. High of the day on SPY. Or 1166.
$43,000. We saw in April professional, scientific, technical services adding $45,000. Alex, it was across the board though. Employment and healthcare increased by $40,000 in the month of April. Leisure and hospitality also ended and trended with higher jobs up $31,000. Food services and drinking places up $25,000. I mean, the list goes on here, but again, I do want to point out, most notable, I think, was the increase in non-farm payrolls, Alex. They were looking for a slight increase of 0.3%. That came in higher than expected, feeding into that inflation narrative. And, you know, this is in line with the trend that we've been talking about for a while in terms of what we've been seeing as far as strong labor conditions here in the U.S. And, again, not necessarily suggesting normalcy as far as what we're hearing about in terms of recession, right? The economy's slowing. It's just not showing up in the jobs market.
Hi, Ripping.
And Ben, I think one of the key takeaways for me was the revision aspect. Some of those prior numbers were ratcheted down, not slightly, but pretty substantially. And I think that maybe softened this pretty impressive report, which I think was welcomed by the market. So some of those fears that you talked about with these two counteracting forces of inflation, but then sort of almost deflationary risk in recession and financials and all that stuff going on. Two counteracting forces making it very difficult for the market to kind of judge what's going to happen next. I think that, well, at least it was softened a little bit. It wasn't just this blowout quarter that just completely, or a month that completely confuses things here. But talk to me about the market reaction, because I sort of alluded to it. It's a lot of green today, and not like a little bit of green. I mean a lot of green.
Yeah, green arrows across the board. All four of the majors, as we mentioned, enjoying gains in reaction to. And I think that's a solid breakdown in terms of what we're seeing here today in terms of price activity as far as reaction to the report, but also on the bigger picture here, Alex. I've been talking about how really investors and traders have managed to kind of discount the negative and focus on the positive. Headed into earnings, we had this bank debacle, which has been going on. And even with all of that being said, this jobs number coming stronger than expected, I think it is a case where we're really focusing on the positive and not the negative in this instance. And earnings, for that matter, there was a lot of expectations that they were going to disappoint. I think there was a lot of bearishness headed into this round of quarterly results, and they haven't really disappointed. But all that being said, we're still relatively range bound. So we're seeing big intraday moves, but look at the SPX at 4,100. We're relatively contained. This chart really says it all.
DXY or DXF shares, rather.
got a high from last August up around 43. You've got a low from last fall, October, around 35. And yeah, we're working our way through the middle of that range, but nowhere near, a significant attack on this upper level. Holding above the 50-day moving average, holding above the 200. That's that yellow-orange line here. But I also want to point out a little bit of divergence that we're seeing here in terms of the broader market, the S&P's representation of 500 stocks. This is also what you'd see if you pulled up the Dow chart and the NASDAQ, all three of the four majors holding above the 50, above the 200. But this is interesting here, Alex, because with all of the concerns tied to regional banks, the makeup, the impact that has on the Russell in terms of the names in this broader base 2,000 stock index, you can see that, well, again, speaking of contained, but at this lower level, holding below the 50, below the 200. I think the real win here for the bulls in terms of this weakness in the Russell relative to the S&Ps, the NASDAQ, and the Dow, Alex, is the fact that the bank index this week blew out that lower extreme to the downside. It's been in a very similar pattern as the Russell, but again, it took out the lows this week to new lows for the year. And the Russell's kind of hanging in there still around the 1760 level. So let's keep an eye on this divergence next week, but let's also keep an eye on how this report's digested over the next few days. We'll also get some numbers next week in terms of inflation data, a closer look at CPI, PPI. So lots going on here in addition to earnings, Alex.
Yeah, tons and tons to chew on and digest here, Ben, but volatility just collapsing today. What a difference 24 hours, 48 hours can make from how things were feeling.
What a Friday rip.
A little bit more, let's say, skittish if
those are
uneasy,
DXF shares. It's not barbecue. I already picked up barbecue on this account.
We round the final turn.
Could pick up more today if you get a nice 1080, 1030 dip or even
back
lower.
in Caroline Woods, it's time for FOMO, and the stock of the day is Apple. And this stock, like I said at the top of the show, like a fine wine, this report just seems to be getting better with time
barbecue
here,
for next
Caroline,
week.
because
That's still on the table.
As
long as we don't close too low today.
I think the services stuff is a little disappointing. But the iPhone numbers are just
But it's looking strong.
Good.
Didn't really bounce off this 1030 level.
So much stock.
Made a higher low from yesterday.
Investors just love this thing. They just keep buying it.
Dan Ives calls the iPhone business segment the heart and lungs of Apple, and just really shows how key it is. But yes, Apple shares up closer to 5% now after earnings and revenue fell from the year-ago period, but still came in ahead of analysts' expectations. EPS of $1.52 easily beat Wall Street's estimates of about $1.44. In terms of bottom line, revenue fell 2.5%, its second consecutive quarter of declines, but $94.8 billion beat analyst expectations as well. Breaking it down by segment, of course, the iPhone revenue we were talking about, that actually grew 1.5% to $51.3 billion. That easily topped analyst expectations of around $48.7 billion. You mentioned services revenue. That did fall a bit short of estimates. Mac computer revenue also fell short of estimates, and iPad revenue was in line. But speaking of declines, China, which we know is a key region for Apple, revenues there fell 3% to $17.81 billion. But that was an uptick from the December quarter, so all about perspective, right? In terms of what's next for Apple, during the call, its CFO said Apple expects revenue growth in the June quarter to be similar to its March performance. So in the March quarter, revenue fell about 2.5%, so we could be seeing another decline sequentially for revenues. I do also want to note that we had talked about Apple opening these new savings accounts that yield 4.15%. Didn't get any specific metrics from Tim Cook on the call, but he said the initial response to those savings accounts has been incredible, that he's very pleased with them. So just another way Apple is diversifying. Obviously not without headwinds. There are definitely macro headwinds, some foreign exchange headwinds. And also at this point, Alex, valuation is being called into question because Apple's up about 34% so far this year. It's inching closer to those highs, only about 1.3% away from the 52-week highs. So I'm curious, when you look at this from a trading perspective, you know, how you might go, or someone might go about trading a name like Apple, given how far it's already run, and another 5% today.
Yeah, back into sort of a stone's throw of that all-time high. But just to put into context as well how big this move is in real dollars, Caroline, about 16 billion outstanding shares, $8 move. we're talking somewhere in the $120 to $125 billion created in the last 24 hours for Apple shareholders. For context on how big that is, that's essentially just a whole Starbucks was created just overnight here in this name. The numbers are just huge. But it's the FOMO segment. The stock's on the run to the upside. It's records all over the place for revenue, even though it declined a little bit. This is still a big quarter, and for the investor or trader who wants to, pile on here as this one rips higher and maybe sees it going back towards those all-time highs, I have a trade illustration that would seek to benefit from that. I looked at buying a call butterfly in this name, centered around the 180 strike to the upside. That's near that all-time high that is just below 183. We're going out to June, though. No earnings events on the horizon here for this one. So giving it a little bit of time for this to ultimately take place if it's going to. The way this is structured, though, Caroline, we're buying a $10 wide call vertical, selling a $5 wide call vertical on a price that is $4. It doesn't have any upside risk theoretically. So if you're going to be bullish something, you don't necessarily want to lose if it goes too far to the upside. So conscious of that when structuring this one. Break even at 174 is basically where the stock's trading right now. So kind of a break even if the stock just maintains value. But you can see the best case scenario would be for a kind of continued upside grind towards 180. You do, of course, start giving back some of those potential profits if it does overshoot that, but it would level off at a $100 theoretical max profit above 185, which, of course, would be a new all-time high for Apple. There's always a chance this thing moves lower. There is risk on it, of course. It is a move to the downside. If it falls below 170 and stays there, and all of these options expire worthless, Caroline, your risk would be the debit spent. So in this example, that's $400 here on that $4 debit. But a bullish trade, one that hopes for a move towards that all-time high to take place over this next month and some change.
Certainly inching closer to that level today. We're going to take a quick break, but when we come back, Alex is going to talk to Kevin Green about why the regional banks are rallying back. We're seeing green across.
Just melting up here. Melt up. Barbecue. We've got 16,292 on the bid at 11.50. $5,000 on the ask at 11.60. For some reason it's showing me 11.40. But the bid and the ask are both above that price, so yeah, somewhere in that range. Buys up 1.62%. GME still. Oh, that General Motors. I was like, what? GME still flat at VWAP. What a day for GameStop. So crazy. So crazy that it's not crazy. BBBYQ. Last transaction was for 11.17. 11.7. 11.42. Probably the best way to see the price. Big spreads. Oh, so that is giving the last price. Just showing the spread. All right.
Yesterday, we had
He's
this
in that green
report that came
tie.
out from the Financial Times that was incorrect regarding Western Alliance and their potential for looking at strategic options in the marketplace. Western Alliance came back and refuted those claims that brought the stock back up at the end of the session. We also saw the SEC; they actually issued a note stating that they are monitoring the short selling activity, as well as looking into any manipulative practices that could be impacting stocks in general. We did not note any specific names, but that's also a sign that the marketplace is definitely keeping an eye on the short sellers. And right now, we might just see a lot of short covering taking place at the moment. The White House also made a comment saying they're monitoring the situation. So yes, we are seeing a bounce back to the upside here. But at the end of the day, the dynamics or the fundamentals of these stocks have not changed over the last week or 2 weeks. We still need to get more information. And I think everybody's trying to parse through that as much as possible. We have some key Fed data coming out after the close today to see the health of the deposit base for these regionals as well as commercial banks, things of that nature. I think that's also going to provide a little bit of easiness here when it comes to the marketplace. Last but not least, the Fed's balance sheet. We had some data that came out the other day. It significantly reduced the exposure when it comes to these lending programs from the street. Come to find out, it does appear that First Republic was responsible for about $53 billion of that lending program. That is effectively off the books now because JP Morgan has taken it over. And now we are seeing a little bit, once again, it's nice to be able to see that the Fed's balance sheet is starting to contract. Nice to see where the exposure was, because these banks do not have to disclose if they're utilizing these windows. I believe the Fed doesn't disclose it for another 3 years or so. So well after the fact. So this is why we are seeing a nice little bump in these stocks today in this broader market rally.
You started things off by saying that the story is not going to be over anytime soon, and I was peeking at your shelves behind you. I see a globe and a plant, but I didn't see a crystal ball. I'm just wondering, though, what's the consensus? Are there more shoes to drop? Are there more banks that could fail?
Oh, Caroline, you're trying to get me a little bit of an email hitting my box here in a couple of minutes if I say the wrong thing. What I would say is that we just need to have more transparency. And at this point in time, we probably will not get any concrete data, especially coming from these regional banks, until they report earnings in the next 2.5 to 3 months. And I think that's going to be the waiting game that the market's going to be able to, that they want to be able to see. This is not going to be over. We might get a little bit of insight from the Fed at their next meeting as to the deposit flows and the impact, but the majority of the information that we are going to see is going to be Fed data. It's going to show us the commercial lending side of the business, how much money is being lent out. Are we seeing a contraction? Where are the deposit flows going to? Money markets have also been a topic of discussion as of late. A lot of investors and a lot of individuals looking to chase yields are going into money market funds. I always just keep it in mind for everybody. Money market funds are rate adjusted just like everything else. So if we do see rates contract fairly significantly, that's also going to impact the money markets, and then we could see money flowing back to these regional banks. So I'm not saying that
11.75
for certain I have a crystal ball, but usually when we see
BWAP
this type of
11.87
volatility in the marketplace, especially for an event like this, Caroline, it could take months, if not years, for us to get the full picture of the impact on the economy.
I love that point, Kevin. I think also it comes down to we got to define it a certain way. If it's defined by banks failing, maybe it's over. But if we're just defining it by disruption, stress, uncertainty, it's hard to say that it's already over at this point. But Kev, we'll leave it there. Have a great weekend. Thanks for stopping by. Kevin Green, Senior Markets Correspondent. Caroline and I will be right back. It's time for Under 30 when we get back. We're talking some Carvana, another name making a nice move here on this Friday, up almost 30%.
Irvani. Or 1217 is my next level on there. Yeah. Should have been paying attention. I could have had nice profits here. I hope my short like here. At least stopped out. Set a stop there. I think that was my problem. Yeah, I wanted to ride it. Barbecue 1131. Back down a bit. Definitely starting to get that illiquid, widespread OTC stock look. Coming up on 2 o'clock. If you guys haven't subscribed, make sure you do. Subscribe on the hours here. It's extra special for the algorithm. That button's red, make it gray. Thank you guys for your likes. 38 on the day, well done. Pretty chill Friday. A lot of earnings, gap ups.
Again, declined about 25%, but nonetheless, they were up about to $2.6 billion. And I think one of the things that the company has done is they've done a good job to liquidate some of the excess inventory that they accumulated over the past few quarters or so. But if you look at the expected earnings per share profile, we talked about it last quarter, I believe. They were expected to lose about $10.12 a share for the remaining portion of fiscal year 23. Now that's improved, but it's still, the expectations are a loss of about $6.94. So overall, the business from a structural standpoint is quite challenged financially, but things certainly have improved based upon not only the price action today, but also some of the guidance that the company has provided. There's some analysts that are quite mixed on it. I mean, Piper Sandler is still constructive on the stock with a $20 price target, but Wedbush on the other hand, still sees what I think is more accurate in the sense that one quarter doesn't necessarily make a trend change for a business that is still down about 85% over the last year, even though on a year-to-date basis, you can't dispute the stock is up over 100%. I think it has to do with the fact that this company, from a short interest standpoint, is highly shorted. If you look at the free float as a percent of shares that are shorted, 65%, and that's quite high. And I think what we're seeing today is a little bit of a short squeeze
back
as well.
Up to VWAP there. 1190.
George, I want to ask you, it's funny, you mentioned Piper Sandler. They're only one of 4
Yeah, it's nice having a little reset.
Company, though. So obviously they're a bit different in terms of being upbeat, and I don't want to, rain on Carvana's
the worst
30%
loss of your career so
today,
far.
But the expectation for adjusted profit in the current quarter,
yeah, it's Friday, man.
Coming sooner than expected.
2 hours.
Adjusted just strips out a bunch of one-time items. Is that worthy of a 30% pop?
Well, that's the thing. I think if you look at
no, you can't say it was a mistake and look back hindsight.
Today, we're seeing
you didn't
a lot
know.
of growth stocks.
You should be happy with yourself if you're practicing good risk management, had a plan and stuck to it,
today,
even if you lost money because of it.
Parcel of this move has to do with the overall market conditions.
That's the point.
Based upon also the report.
About having a plan, sticking to it, having risk management, sticking to it, and so being pleased with yourself. However you do that. Don't trade on emotion and don't trade on hindsight.
You have to really look
I know.
financial position. One,
you're going to take losses. You need to
losses or the expected
mitigate
losses
it. Kill losers quickly.
In 2023, just
and be happy that you do.
If you think about
even if it starts to run, because you stuck to it.
Loss compared to the stock price around $9.36. That implies
he's talking about like
negative earnings yield.
20% move.
I think if you also look at the debt position for Carvana, this is also a structural
now
challenge.
Your account's green and it's nice looking.
$6.5 billion in debt that's being supported right now with only about $1.3 billion in equity. The company does have $800 million in cash and equivalents. That's certainly going to help cushion their operations on a forward basis, at least maybe in the next quarter or two. But last year they lost about $1.5 billion in terms of.
But how many days will you think twice?
They still got a cash burn. They still have a debt issue.
How many days of dropping 10% a day?
They still have a market in which car prices are quite high. Still, financing costs are quite high. People are being priced out of the market from the standpoint of new cars, even though Carvana deals mostly with used cars. I think at the end of the day, you have to consider the financial conditions that are still outweighing some of the positive benefits that the company reported on a quarterly basis.
Appreciate it, George. Yeah, I mean, this was one of the first names that we started to see the stress alarms going off when it came to interest rates impact both on their actual business, but also their debt situation. We'll leave it there, though. Have a great weekend, George Tillis. Thanks to Caroline Woods for joining us this hour as well. Coming up next, we've got the watch list with Nicole Pedalides. Have a great weekend, everybody.
Pedalides. Yeah, the data farm. I mean, barbecue was a good data farm. Still got burnt to a crisp. That's what kind of got me stuck in this actually in the first place. There's usually a reason why the IV is so high. Yeah, not playing out so hot, that U car. Well, he sold a low, he walked back in at the low. It's not like... Yeah. He took off his risk before OTC, which... I mean, I think it was smart. I did the same thing. Of course, in hindsight, I could have held through it and saved a little bit of the slippage of closing and then reopening and the gap, but... GME looks awesome. Hope it's not a fake out. But yeah, it was good to get back in too, because we saw that it was natural price discovery, and you know, it's not going up, it's not going down like every other one. It's the exception, not the rule. So holding through to OTC was just, to me, was stupid. Like, that was a dumb move. If you're looking at other stuff, like logically, it would have made sense to do close and then see where it ends up at, and then reassess and reevaluate and then buy back in. I wasn't expecting this, so yeah, I bought back in pretty quick. I was planning on buying back in once there was fundamental change, but we're seeing our dead cat bounce, our relief rally, our retracement from 3 months of selling off. We're just seeing it in OTC now. What it seems like, at least. It's great. I'm getting feedback, that was weird. $2 o'clock. saw that whistleblower reward. They're paying the whistleblowers more than they're finding the people that they're whistleblowing about. Kind of makes me think they're taking the whistleblower data just to get it off the street, cover it up. Yeah, IP's had a nice bounce. Nice bounce today. Especially $1 million is just insane. Where'd they come up with that number? I took the short on the futures up here. Could keep rallying, I don't know, but it could come back down. I'll just keep closing and taking it higher and higher. As soon as the banks start complaining, I know it's true. The banks are the ones that got us into most of this mess anyways. They're over leveraging.
Yeah, we're basically seeing a reversal from some of the moves that we saw earlier this week from a lot of these
unrealized
gains.
gain.
Now we talked about it yesterday.
Sold but not yet opened.
That came
I don't
out
remember.
from the Financial Times that was inaccurate.
Open but not yet
Western
sold
Alliance
securities.
looking at a strategic option for dealing with their bank. Western Alliance immediately came back and
open
actually
positions that they don't close.
And ever since then, it seems like these regional stocks have been moving to the upside here. We also know that the SEC is also looking.
I don't know if that's one whistleblower. I don't know exactly how it works. I'm assuming it's not one person.
Activities that could have also tipped off some of these.
But yeah, maybe they'll buy. They'll buy Bed Bath & Beyond.
The stock, and we are also hearing from the White House that they are also monitoring the situation. We saw some upgrades coming down the pipeline as well. We have JP Morgan actually double upgraded Zion Bancorp to overweight from underweight with a new price target of $29. They also have upgraded Western Alliance to overweight from neutral, and they also have a new price target there at $46. So a lot of bullish momentum when it comes to these analysts. We did have Wedbush that actually took off the one of these stocks because of basically the price action, but they were still pretty much bullish when it comes to the regionals. A lot of these analysts are just believing that the stocks were completely too oversold and that they did see a little bit of a rebound, and the deposit outflows that were reported during the earnings announcements last week and the week before last were not as bad as expected. So there is a little bit of optimism when it comes to the regionals, but we might not be done yet with these volatile moves here, Nicole.
All right, thank you for that. Obviously a huge story. And then we spoke yesterday about Microsoft and AMD, and now there are some developments.
Yeah, we are seeing. So yesterday, Bloomberg actually had an article regarding Microsoft and AMD that they were teaming up in order to build out an artificial intelligence processors and chips and things of that nature. Well, Microsoft actually came out and denied those claims, saying that AMD is not part of Project Athena, which their Project Athena is basically the initiative for them to be able to get into the artificial intelligence space, to be able to develop these chips, to be able to be a very significant contender within the space. So they denied the claim. But Nicole, usually you would see a drop off as we are seeing on that chart here, but the market is kind of a little bit forgiving today since we have green on the screen. AMD is actually still going to be up to the upside here in the session, even though we did have that report that denied that they are going to be working on these AI chips at this point in time.
All right, thank you for that update. Appreciate it. Kevin Green, great to see you. Thanks so much. All right, we continue our conversations about the market and look at the bigger picture. George Schultz is with us, founder of Schultz Asset Management. So let's start with the banking sector. What are your thoughts on this week that was?
Wow, what a week we've had, Nicole. So in our view here at Schultz Asset Management, these problems with the banking sector are really potentially indicative of a broader systemic issue. And, the risk that it's not just these first 4 banks that failed plus Credit Suisse overseas, but, lots of other banks might have the same issue. Really, banks are, in effect, by definition, they're highly leveraged. Most of them hold about 10% equity capital, and the rest of their assets are leveraged in one form or another, mostly through deposits. And so if depositors lose confidence, that could be a big problem in the banking sector. And of course, it could affect the whole economy.
And so the question, too, that people are asking are Americans feeling safe with their money in the banks? Should they be?
At this point, depositors really haven't been impacted at all. But the question is, if these numerous regional banks had
Yeah, the
issues,
SPY kept melting up. I just hate taking the long at the high. So
whether it's contained or not, I really doubt it,
you have to
because
trade, but
they all seem to have the same problem, and it really harkens back to the fact that interest rates were so low and they climbed so precipitously. They also went up further this week with the Fed's new increase just a day ago, and so lots of banks are sitting on big unrealized losses. But it's not just the smaller regional banks; it's also all the way up to big
day here
banks
on SPY.
like B of A. And if those banks were honest about how they mark their book, there's a good chance that you could have a crisis of confidence, and eventually that could create a systemic problem. So yeah, it's a good question. So far depositors haven't been impacted at all.
GME, this is
Thank goodness
wild.
There's been some pretty rapid response from the regulators.
Happening.
But we shall see how this all plays out going forward. It's certainly a tough
I feel
time.
like this thing's just
for
gonna
investing.
blow up at some point.
There's lots of uncertainty and lots
This
of risk
much
in the markets.
spooled up, pent up
All right,
demand.
let's get to the
Look at how
Fed.
tight this thing is
We
getting.
got our jobs report. So the Fed makes the move. Next week we'll
This is
get
crazy.
CPI and PPI. And what are your thoughts on some of the economic news that we're getting, coupled with how the Fed has to decipher what's going on?
So, in our view, really, the Fed is stuck between a rock and a hard place. They had to raise just yesterday, and now you still have a continuing problem with inflation, but all these challenges in the banking sector are perhaps giving the Fed reason for pause. I mean, and it's really just for the same reasons that we just discussed, that there might be a systemic issue, or that bank lending in general may slow down and thereby taper down the rapid growth we've seen in our economy. But inflation tends to be sticky, and so we'll see. In our view, there's a good chance that we'll continue to have inflation, especially if the Fed stops, and doesn't do anything, maybe at its next meeting in June. So it's a tough call, and there's lots of other problems too. There's the war in Ukraine. There's risk of a future potential recession. We have an inverted yield curve, which is likely to impact banks even more going forward. And of course, we haven't even talked about it, but the U.S. government might default just in a couple weeks.
Yeah.
So we'll see.
That's right.
HKD had its bump.
Yeah, that's absolutely right. And that was my next question about the debt ceiling. Of course, you don't want to have a default in the U.S. and
Chinese plays over. Just be ready next time.
Reports about the economic collapse
Be
to
decisive,
a certain
act
extent
quick.
that could occur
Get
in
out quick.
GDP if this doesn't get done.
Yeah, I think that's right. And this has happened before. There's a pretty good likelihood that politicians somehow will have a meeting of the minds and either kick the can down the road or come to some compromise in the near term. So hopefully that does occur. But it's just another symbol or another sign of really risk in the system, and risk that there are issues. And I think that if you put it all together, all these factors, it's really causing a reduction in appetite for risk. And I think that's why we're seeing so much volatility in the markets. For instance, with that big bank sell-off we were just talking about earlier this week, and then the quick rebound today, we'll see what happens next week. But investors are understandably concerned about taking risk right now, given all these issues.
Look at that. The VIX down 15% today at 17.
Nickel too. Yes, these are all Chinese stocks you're mentioning that have pumps and dumps. Cyclically.
I speak to a lot of people, and many of whom have higher price targets than
Put them on a watch list. Set an alert.
Your thoughts
when I go
on
next
some
time,
trade
be ready.
ideas for folks?
So here at Schulte Asset Management, we've actually been reducing long exposure, and we've built up our short book a little bit more. There's some really good opportunities for short selling companies that are ridiculously over leveraged. These regional banks have actually been a good place to look for those ideas. On the long side, our portfolio is evolving a little bit. We tend to focus on shorter duration investment plays. So those companies where you have a rapid return of cash to your shareholders or your investment in one way or another. But a new theme for us is distressed debt. There's more and more of that outstanding, and it's a part of the portfolio that we expect will continue to grow going forward. And it's really on a case-by-case basis. For example, Revlon had distressed debt that was trading. It just came out of bankruptcy a couple of days ago, and the former Revlon distressed debt lenders received the lion's share of that company's new equity as it came out on the other end. And together, the plan overall eliminated about $3 billion of Revlon debt. So we're excited about the future for Revlon as one example.
Bullish on
How do people
Revlon, this
go
guy.
about trying to find companies that have distressed debt?
Just look around; they're all over these days. But I think for
BBBY.
the individual investor, it's not easy to do. It's really best to work with an experienced investment manager who has the ability and experience to find and profit from distressed debt trading.
All right, George Schultze. Thank you, Schultze Asset Management. Great to see you, George. Thanks. Okay, later this hour, we'll
You
take
can
a
still
look at
calls
the
on
venture
old
capital
shares.
space
Everybody
in the
knows
wake of
that.
What's been going on with the regional banks and the CFO of
You don't manage your Apple
Altios
shares, though,
walks
do you?
us through the
Your brother?
latest earnings report. Our panel
They're already
breaks
doing
down
that.
Apple's post-earnings move. So let's dive into those numbers that are pretty
But
good.
you're
And a few stock picks
you're
to keep
plenty
on your
capable to sell
radar.
cover calls in your
Raytheon,
own
Danaher,
portfolio.
Alphabet. Our guests will explain next.
Yeah, barbecue moving up a little bit. Basically right at VWAP, but last transactions was 11.95. 11. Okay. 5. 11.99. Yeah, above VWAP. See, I'm not fully positioned. But I'm fine with that. See, I don't know. I want some exposure for over the weekend, but maybe not as much as I have during the week for these kind of day trades. Barbecue heating up, 14.5%. 12, 14. Volume, a lot of volume picked up right in there. Have to pay him a ton to fire him. Don't you have like contract labor down there? Yeah, I got some volume and some barbecue push. 15.5%, 12.25. It's very nice. You have 19th, just the May OPEX. Yeah, more volume on this 5-minute too, 16.5%. Nice little invert head and shoulders being confirmed. Any longer you work for someone, the more they have to pay for you. Try to get rid of you. Not bad. But I mean, that should be capped, I feel like, at some point. I don't know. Contract, I would just contract labor everybody. Seems like that would encourage people to have high turnover. Yeah, gap filled this morning. Well, I guess at noon. I don't know what you do. It's been filled for hours. Barbecue soles up 14.3%, 12, 12, 5. Like it's topped. I did get that short back here, so I'm gonna ride it down. Maybe move to VWAP, por favor. Thought you were evil? Nothing wrong with contract labor, man. That's great. I do contract labor. I hire people under contract labor. Pay the person for the job. Zoomed in.
Alphabet, Google over all these other names related in tech?
Yeah, so good question. We've obviously seen a really strong rally in the mega cap tech stock so far this year, but Alphabet is one that we still think the valuation looks extremely attractive. As you mentioned, a lot of good news in Alphabet's earnings report out last week. Better than expected results across most of their segments. They saw a rebound in ad spending, and really importantly, I think the first ever profitable quarter for their clouds segment. We also think that management understands now that they need to kind of right size
You
their
just want
cost
like
base
bearish news?
and their workforce as well.
Yeah, shareholders. We're in
So
Chapter
the
11,
days
and
of
shareholders are usually the last to get
earnings
paid
per share growth for Google are probably
after
in the
all the
rearview mirror,
creditors
but
are
it's one that we
paid
think that
and
can grow in
all
the
the debt's
medium
paid
term
off and everything.
at mid-teens
Bondholders,
types
all that.
of
They all
growth
get paid, and
rates,
then
and in our
shareholders.
view, that
So,
deserves a premium valuation
if there is a
compared to
buyer,
the broad market, not a discount.
and it's not just a liquidation,
Do you have a year-end target on the S&P
then it's
500?
up for negotiation.
This morning someone told me 4,300, which would be higher than where we are now. What direction do you think we'll be by the end of the year?
I guess I don't quite understand your
We
question.
just kind of established our year-end price target at the beginning of the year for 4,075 on the S&P, which would be about a 6% advance for the year. So, we haven't adjusted that target as of yet. Coming into this week, the market was trading at about an 18 times forward multiple, which seems a bit expensive just given the amount of uncertainties that we face. But that multiple has obviously been upwardly biased by the run in mega cap tech stocks. So, looking below the surface, we still see plenty of attractive opportunities and cheap stocks out there below the index level.
All right, good to speak with you today, Daniel. Thank you. Daniel I, CIO at Fort Pitt Capital Group. Thanks. Coming up next, we will catch up with the team from Trinity Capital following the company's latest earnings. The Dow right now, 463 points. All right, a winning day. And actually, the NASDAQ has turned positive for the week.
1331. I don't know how they do implied volatility on a stock. There's no Jenny today. Unless she's gonna report from home. Barbecue back down below BBBYQ. SPY just consolidating up here now. Some Fridays is special for Jenny. This one happens to be the Friday after her birthday. IEP still up there, 24%. Nirvana 25, Open Door 31, Bow 31. Buy new high of the day. Buy everything.
There's been, tightening there. Are you finding more folks trying to come to you?
Yeah, we've seen really kind of a fundamental shift in how banks lend money.
Back to
it started with Silicon
ripping
Valley
on
Bank,
Friday and
Signature,
potentially closing at the
et
high.
cetera. There was a model that existed where companies would put all of their cash in a bank
230.
account, and then the bank would provide a lower cost of capital than, say, an alt lender like Trinity. That's just broken at this point, right? Companies are looking to make sure that they protect their deposits, their uninsured deposits, and banks are not going to lend them that money that they were before. And so, yes, the opportunities have increased significantly. I think that we're kind of gone back in time, maybe 10 years, to where banks focused on what banks do, which is deposit services and maybe some receivable financing. And then the senior secure type financing, more growth capital, is meant for more alternative type lenders. So the pipeline suggests that there's a massive gap. And, we are, prudently kind of walking into it, cautiously optimistic about the opportunity ahead right now.
So this really is
Holy
a fundamental change at this
moon.
point because,
Look at
as
that.
you said, they would put a growing company would put all the money into the bank. The bank, in turn, would give them a lower cost of capital and lend them money. But at this point, that whole
Him clapping in the background.
ecosystem has changed. I mean, why?
You guys are
why
getting
can't it
lit
continue
over there on the
like
stock
that?
exchange.
Yeah. This
Up it
venture
up.
lending model has been around for decades. And, the gross yields
green
for
candle.
us, for our 15, 16-year history,
Outrageous.
have been in the high teens. And to achieve returns like that, you have to take some risk. I mean, you have to take some risk to achieve those types of returns. And historically, the warrants and additional upside that we get, they cover our losses and they provide us with some incremental upside. If you think about a bank providing those types of loans and taking that type of risk with deposits, it doesn't actually make a lot of sense. So yes, the model has changed. And for companies that are willing to keep their, the bulk of their cash in a bank account, they probably will still get some banks to provide and lend them term debt. But for most of those companies, they're willing to pay an extra 300-400 basis points in annual costs to make sure that they can work with a permanent source capital like us, who can't have a bank run, right, and is going to be there today, tomorrow, and in the future. And so they're willing to pay that higher cost of capital now for the safety of knowing that we will continue to be there. And the incremental cost, it's a rounding error. These companies are growing at a 50 to 100% annual growth rate, and their valuations are growing rapidly. They're willing to take that extra
Can you
cost
get a
because
pop
at
of
the
this?
end of the day, it's really a rounding error
Man, this
in terms
thing
of
is
the
just
incremental cost of the
stone
company.
cold.
It's not worth the risk of potentially not having your bank or your partner there tomorrow.
Yeah. Can we talk about the latest quarter? I am seeing here that Oppenheimer speaks positively about your company today. Around lunchtime, a print came out. The price target is $13. They maintain an outperform rating. Your stock's currently trading at $11.78. You did have a miss on earnings, it says, and a beat on sales. So I think a very attractive point here is the quarterly dividend, which you raised by over 2%. And this dividend yield is very handsome, and 9 consecutive quarterly dividend increases. Why are you being so generous?
So our goal as an internally managed BDC who doesn't have a management company, there is no fee, there is no carried interest. We're fundamentally different than the rest of BDCs out there. We are trying to create a very consistent dividend story for our shareholders, and then we want to be a growth story. So we have the ability now with SEC approval to manage funds off balance sheet. Our shareholders at Trin actually now own 100% of a management company, which is charging fees and carried interest on multiple funds that we're going to set up off balance sheet. That's new income, incremental to what you see here. Our job and our goal here is to continue to see that ladder up and to the right over time, increasing dividends as we generate new and outsized returns both on and off balance sheet, which are all accretive to our investors and our returns. And so that story is one that we sold when we became a public company. This is what we think we can do. We think we can just keep growing it over time. We've proven that out, and we're capitalized right now to continue doing so.
Have you been forced to, I mean, I know there's definitely demand now going to venture capitalists like yourself because people are not getting the loans from the banks in the same way. So it's almost like a battle, like a housing market. Are you finding you're able to make some money on this situation, or are you, on the other hand, trying to give them really good deals so that they don't go anywhere else?
I think we're focused on credit first and foremost. I think that, the investments you make during a period of time like now, you will be judged in the future on, right? And so for us, it's making sure that we make investments that are solid credits, that continue to grow, continue to perform. And then, yes, we're being opportunistic. I mean, I think what we're seeing right now is a significant amount of equity that wants to find a home, right? Private equity, venture capital, there's $250+ billion that's available, that's committed. It wants a home, and you have the struggle with companies that have raised either too much capital or too much of a high valuation in 2020, 2021. And they do not want to take that damaging down round. And so you have this battle right now of equity wanting to find a home at a discounted valuation, companies that just do not want to take that hit yet. But it's happening. Within our own portfolio, we saw 25 companies in Q1 raise over $1 billion of equity at across the board, just pretty significant decreases in valuation. What that means for our organization, though, is the ability to reprice warrants, right? It's the ability to, on new deals, get in at lower valuations. And we think this is a really, really interesting, once in a generation even opportunity from a valuation standpoint to get in at the right time and provide maybe some really interesting, upside potential in the future.
All right, Kyle Brown, thanks for being with us. Trinity Capital. Nice to see you, Kyle. Thanks for being on the show today. Appreciate it. Still ahead in the second half of our show, earnings reaction for Portillo's and
anything positive? Yeah, rumors of a buyout. So really, rumors is what we're looking for. Once the buyout's confirmed and there's a price, it's basically over. I mean, the stock should get to that price and then should hold there until it's completed, and then, it'll probably go back to the NASDAQ, right back in the exchange, and got a long-term hold, which may or may not have a squeeze after that, but all the volatility and stuff most likely will be in this time before anything's confirmed. Yeah, just on the rumors. Once it's confirmed, like, you might have a move then, if you don't get a rumor first. But I'm not sure how it's going to react on OTC. Like, I'm very curious. With no halts and no high frequency trading, no payment for order flow, I mean, a move in OTC, like, you see multiple 1,000% moves, tens of thousands of percents. Given that's in a different kind of scenario, though. It's not, you don't usually have it with all this liquidity and volume. You'll have it because it's a huge spread and someone wants a big order, and there's just, not shares unless you pay a crazy price for it. So that's why I'm curious how it's going to look on OTC if we do get some kind of squeeze. I could taint it. It's all how it's negotiated. Yeah, but shareholders could could get nothing out of it. That is true. That is a possibility. Yeah. Yeah, the OTC pump definitely could happen with the rumor. I think the lack of corruption in OTC probably outweighs the people that aren't able to buy an OTC, and outweighing the gamma squeeze potential, because that's another way they just corrupt and manipulate the price and control the prices with options also. So yeah, I think it could be exciting in OTC squeeze for sure. Yeah, looking at some OTC, like big OTC movers, and usually it's just huge gap, and it's not. There's not all this liquidity. Because of a lack of liquidity, really, you get those huge percent. I knew it was gonna be a day like that. I don't know why I keep trying to inverse it. Good. So here's one. I don't even know what's going on here, but 0.0001. But when it's cheaper like that, it's easier for it to make that big of a move. But from 0.0001 to 0.0023, that was 1900%. Which isn't even that crazy. This one's showing a 9900% gain. Goes back here. There's a chart. This is from 10 cents actually. Cents. See how low the volume is though? The whole day is only 20 volume. And that day 15,000 starts to pick up. That was 3,800%, 3,900. I don't know if this one should be somewhere. Yeah, no, there'll definitely be some class action lawsuits against the board. Probably regardless. But that doesn't matter necessarily. That, to me, that doesn't mean, oh, it's definitely going to be they definitely weren't acting in bad faith. That's not I mean, you know what I mean? They could still be acting in bad faith, and the lawsuit happened. Yeah, lawsuits won't help anybody. Class action lawsuits, lawyers get paid, we get nothing. Like hardly anything. And most likely there'll be some kind of limit to how much you lost. And if you didn't lose enough, then you can't be a part of it. Microsoft 313. Hey, Lords. Yeah, I think you're gonna get a bump into next week, it looks like. At least the beginning of the week. It is SLD though, right? Yeah, that starts on Wednesday, so I think it's Wednesday. Is this one of those days gonna close the high, man? That's just crazy.
Because Texas, as you said, is doing very well for you. What are some of the other areas that you're looking to open new restaurants?
Yeah, absolutely. So we've said we're committed to opening 9 new restaurants in 2023. We've announced 6 locations already, 3 within our core market of Chicagoland. We announced 2 more in the Dallas-Fort Worth area, and then 1 within Arizona. So we're going to continue to focus on growth within the Sun Belt states of Texas, Arizona, and Florida. And then we're going to continue to get scale within markets in the Midwest, such as Michigan, Indiana. And then we still have opportunities in our core market of Chicagoland. So that's what's going to be our growth plan, both within 23, 24, and into the future. But we're going to continue to look at new markets as well, Nicole, because we know this brand is a national brand, and we're going to travel to everywhere that people like our food, which is everywhere.
It's everywhere.
It certainly
We
sounds
travel
so,
everywhere
because
we like
the
our
fans
food,
are obsessed.
which is
The
everywhere.
website says so, and of course, the footprint over 60 years.
I've got another little resistance up here. See if Spy cares about it. Almost 2%.
Established in 1969 by Dick Portillo, who took $1,100 and kicked this off, and look how everybody still loves it. Obviously, there's innovation. I see some new products, but I do want to talk about the numbers specifically. And while I see a couple of buy ratings here from Guggenheim and Stifel Nicholas, tell me about the latest quarter. What went right? You did talk about sales growth and EBITDA growth and the number of transactions that are moving higher. What were some of the headwinds, and how are you tackling those?
Yeah, first, I just want to give you just quick numbers. You know, we feel really good about the strong quarter. Revenue was up 16%. We grew that restaurant level EBITDA by 24%. Our restaurant level EBITDA margins are over 22%, Nicole. Like everyone else, we continue to see inflationary cost pressures within our food costs. Those were up nearly 9% in the quarter. Labor was up about 7% in the quarter. We expect those two costs to be up mid-single digits for the full year 2023. So we're seeing some moderation in some of those costs versus what we saw in 22.
Like a month ago.
But those still remain pressures for us in 23.
Food and labor, and I think that's not just you, that is every single restaurant company in America, as you said, but you are seeing moderation.
The move from here to here is massive.
Can you just quickly
tell me that?
I'm gonna dip by that. 0.5%.
No, we are. We saw in the fourth quarter, food alone, Nicole, was up 14.5%.
I sold and bought.
That moderated to 8.9%
I sold
in Q1.
this morning.
I expect that to go
here.
down even further and
double top,
sequentially deflate
and
in
then
Q2
I bought
versus
some
Q1,
here.
and then moderate a bit more in the back
I have
half
orders
of the
to buy
year
more
in Q3
1080
and Q4.
and then
So
1030.
yes, it's good news for us, and I think
So
for the
I'm
rest
gonna hold
of
some over the
industry as
weekend.
well.
Maybe less than I've been trading during the week.
And the labor picture, are you able to find folks to fill the spots that you need to? Because, last year we heard a lot about how companies weren't able to fill the spots. Now we're hearing companies talking about layoffs. Where do you stand in the labor picture?
We did not have any issues
staffing
our restaurants
not
last year,
bad.
Nicole. We're continuing to not have staffing challenges this year. And I think that just speaks to the culture of Portillo's, and that's something that we focus on, and in our values of family, greatness, energy, and fun, and we hire based on that culture.
Are these guys from the Midwest or something?
To get great people that are interested in working at Portillo's.
Like I said, typical Portillo accent.
The new restaurants that we're opening, we continue to be able to staff those up, and as well as our existing restaurants. So staffing currently is not a challenge for us. I understand it's a challenge across the industry. We just got to make sure that we're providing that great proposition for team members to join Portillo's, and we think we have that.
And yeah, certainly sounds like it. And then last but not least, some of the top selling items. I know that innovation is always something that CEOs tell me about, that they, each company has to put new items, best selling items. What's been hot here?
Yeah, you know, we generally are a restaurant company that doesn't get into the LTO game, the limited time offer game. Our number one selling item pretty much across all markets is our Italian beef sandwich. It's just very craveable, and it's a favorite amongst all of our customers. The Chicago style hot dog as well. I will say, Nicole, that recently we just launched a rodeo burger. So I would encourage everyone to check that out. Look at our social media marketing and give that burger a try. I think it's fantastic, and that's part of our menu innovation, is just making products that are simple for our operators to make, but also that are craveable for our fans. And so we think we have that in the rodeo burger, which just launched here recently.
All right. Well, Michelle, thank you for this interview. Everything sounds delicious. I know you're doing great in states like, you know, Chicago and Illinois, I should say this is the state, Texas, Florida, Arizona. How about New York? I mean, we have a lot of vacancies. Can't even get a little small space. I mean, there's some really popular pizzerias that basically have a little
Yeah, I consider that the
doorway.
Midwest.
So may I humbly suggest New York in the future for Portillo's, because
we're going to get there for you. We're going to get there for you eventually, Nicole.
This Friday, so not bad of a spot.
Michelle Hook of Portillo's.
That's true, and
Thank
we've
you
seen
so
better on
much.
Friday.
Great to see you.
Thanks
If we get a close up here, it's super good.
Coming up next,
I'm
all things
very
Apple.
hopeful we don't, but it's
People are
not
loving
looking
it.
good
We'll have the details
for that.
next.
Barbecue moved up a little bit. 14.9%. Look at that trend. Did it just move up that 9 moving average? Elevator. All it needs is me to buy it. Couple of market buys, get this thing popping. Oh, DXF started moving up. Thanks, bot man. I actually canceled half my order. I went in with a little less than half what I was planning to on DXF. This thing is wide spreads too, I think. Yeah. I'll just buy some more GME calls. I guess I could wait till Monday. I mean, I'd pump it if it came down here. Looking for 1030 and even 1080. Yeah, I didn't quite catch that double bottom late. I bought it like up here. Looking solid. 13.25% up. All Wall Street bets. Oh, like market cap limiting Wall Street bets? Or they don't do anything OTC. I think we're above. I don't remember. Was a market cap limit on there? Was it 50 million or 500 million? I don't think they do anything OTC though. Was above 12 and hold. Anything green today, I think, is very bullish for next week. SMX breaking out. So it'll bounce off the low on SMX. That one's not very fun to get in and out of either. SPY, really? Over 2%? Oh my gosh, dude. Nah, I'm just committed to these shorts. This is crazy. Oh. Gap and go. So far, it's been buy in May and stay. Guess not really. This is the day one of May. So we're down from the highs of where we started May, but today is quite the pump. We've literally recovered 2 big bearish days on the SPY in one day, almost 3. Big red candles, big gap downs, 1 gap up and a rally, and we're just right back up where we. Huge ranges. Look at these V's. ACID OTC.
In the near term.
So as we look at what people need, and I know you have names like
BBBYQ.
Walmart and Pepsi that you're watching,
It's
and
pretty dead.
and
Why are you talking
how
about
to
that?
trade this, Logan? You think there is upside potential, right?
I do certainly think there's upside. I wouldn't chase it today when the stock is just rallying. We just generally don't chase stocks at all. But when I'm talking about Walmart and Pepsi there, those are consumer staples that I'm comparing Apple to as far as the PE ratios. Apple's trading at 28 PE. Walmart's and Pepsi's and some of those other staples are in the 30s to 40s. And I really think that's the upside that you'll see in this stock. As it becomes more of a staple, just like you're saying, I really do think that this company is a household name, whether it's the subsidies that are coming from your cell phone providers or just having Apple products and how much of them that they are just everywhere now. I think this company has upside, and I do think it is shifting. And the CEO, CFOs are all shifting how they're talking about this stock.
Yeah, interesting. Martin, you talked about the moat that Apple has, and in fact, actually see more strength in this defensive moat that the company has. How would you break it down as far as the desire for the products and the services and the growth that we're seeing? I mean, what keeps Apple? I mean, you have everything from the ears to your watch to your big computer. I mean, it's across the board. Tell me a little bit about some of the products, where the biggest demand is, and this moat.
Sure. So if we think about Apple's moat, and it will be especially powerful to view Apple's product in a very tough macro environment where Apple's perceived value over other competing devices across laptops, notebooks,
All right, 6
PCs,
minutes to 3
and
o'clock.
smartphones becomes more compelling
I
because
don't stream on the
Apple's
weekend.
product is higher performing and has a much higher residual value towards the end of its life. You can easily trade it in with Apple or with one of the carriers, and you can can upgrade to the latest generation of the products. So that perceived value, higher perceived value over other competing devices when other competitors are struck with lower profit and higher in cost, will help Apple to continue to gain market share. So that's one side. The other side is just
growing number of services that tie the users down to the Apple ecosystem. Once you're in, once you have enjoyed the benefits, once you have enjoyed the trust you placed into Apple brand, then your overall device family grows, and the users becomes a lot more sticky comparing to the time when they just get inducted into the Apple ecosystem.
And then we'll have the VR AR headsets, and I wonder if that will be a hot product for the holidays. Logan, what are some of your final thoughts here pertaining to Apple? Because we didn't really get into the details on the dividend raise, the buybacks. Certainly those were some positives as well.
Yeah, I think it's something that a stable, mature company does. And I think it's just par for the course that Apple continues to be a driver, and it's the reason it's the largest company in the world, right? So I think this company continues to do well. I think they continue to just make a great product, that they're expanding markets. You've seen that they're going into India now. They're growing, and they're going to continue to grow. And I think that the Apple, as much as we saw it come down so significantly last year, it's come right back up. It's closer to all-time highs, and I think it continues to move further up from here.
Yeah, and by the way, the 34th, it is the 34th Worldwide Developers Conference begins on June 5th. That is a week-long conference, folks. So if you love Apple the way so many people do, you'll want to tune in for details and any new news.
Bye, man.
Thank you both.
What the
really
heck?
Appreciate it. Logan Gillen and Martin Yang. Wonderful to see you. Thank you. That's going to do it for us here on the watch list. Thank you for being with me all week long. We had quite a week, and next week we'll have CPI and PPI and more to come here on the TD Ameritrade Network. In the meantime, I'm Nicole Petalides. Thanks for watching. Have a beautiful, safe weekend. Oliver Rennick, Market on Close, next.
Dude, look at this thing. New high there. $414. What a ripper of a day. The volatility the last just this week is insane. Huge down days, just as big of up days. Barbecue to source, prepare for the depression. Yeah, I think shorts are definitely closing. Yeah, what's your what's your data from, Chili? I got a lot of calls today on it, man. GME looking definitely poppy. I closed my longer dated ones and grabbed some shorter ones, since it looks like the move's probably started. I'm not narrowing it down to 1 week. I think this whole month. If we rally next week during SLD, no, is that this week? I'm so confused. I don't know. If we're rallying before an OPEX, though, that just continues on to the week after. But yeah, it's been looking squeezy. Like the last 3 days, there's been little hints of something's brewing. And I don't remember what you said specifically about next week. First red candle and SPY in like an hour. I mean, intraday it seems like a perfect bull flag. Nice increased volume, broke out of this resistance. It's looking good. If this is projecting here, or consolidating before a new rip. Yeah, you're seeing the inflation in the stock market. They're holding cash. I mean, it's just a whipsaw of inflation and deflation. You know, we've seen asset prices go crazy, commodities go crazy to the upside, and they've whipsawed down, and they've gotten not cheaper, but they've come down faster than they have since, like, some of them ever. The rate at which they declined. So what you end up with is stagflation. That whip of up and down, and where you have both high inflation and then low inflation, and barbecue's cooling off there. Drop below VWAP. I'll make it go up if it gets to my orders. I could have day traded on this account. I probably would have closed on that double top again. I don't know if I would have gotten filled though. That moved pretty quick. But I did the same double top back here. This is a pretty aggressive red candle though. Open next week? I think it'll probably be bullish. It really depends on how we close though. If we break below this 1030 and close below here, I don't know if we're gonna open bullish next week. If we hold this, I think we could have the same kind of rally out of open, or a little gap up, then rally like we did today. But it should be bullish. It's a new week. You know what I mean? The momentum's there. Going in the right direction. Yeah, chart looks good. Why same as all bullish all the time. Yeah, got orders. Got a little ways to go. 1080. Got some around there, I think. And then if we get a retest down here at 1030, I'll there. I consolidate and go more. 3 o'clock, hour. You happy? It's been a good quarter on BBQ day. I don't think it's one that's going to affect the stock price. Unless if there's really bullish news in it, which I imagine there would be. Or bearish. I guess it could. I don't think it will though. It would be from filings potentially, not just something that we hear. Like them releasing fundamental news will probably not come in a voice or video conference report. It'll be with the filing and writing.
That productivity and costs showed unit labor costs, rising significantly. That is all combined, wages, ISM prices paid, and productivity and costs, 3 warm inflation indicators.
Just feeling it for next week, huh? Not anything past that.
Any big rip in yields, and without any strength in the dollar, the market is piling into growth stuff. The ARC fund up 4.5%. Piling into tech. Regional banks are having a good day, but it has quickly been usurped by the technology story once again this afternoon, with the NASDAQ up 2.5% and these very magnanimous moves in Tesla, Apple, both up more than 5%. I'm watching Bitcoin because, with all that said, with all of the bullish momentum we're talking about here, if we're going to be breaking out to all-time highs in the stock market, you're probably going to need valuations to expand. And my sentiment gauge of how much people are willing to pay for lack of earnings, that's why I watch Bitcoin. It's got no cash flow. It's got no payout. It's got no dividend. It's got nothing except speculative behavior and a willingness to take risks. So if Bitcoin can get above 30,000, then it seems like we are completely back to a major bull market style behavior. And this is about as good as it can get without fulfilling that title. So quite a week here, a major victory for bullish investors, even though it might seem like it is wildly in conflict with some of the inflationary implications that we got from the data. Let's bring in Caroline Woods and Kevin Hanks, talk a little bit about what we learned here. What do you make of it, Kevin? I mean, are you as impressed as I am by some of this price action?
Yes, I am, Oliver, and here's why.
Oh, a little 5-minute head and shoulders.
Earlier in the week,
yeah, right here.
We're going to get a
kind of already played out, though.
With a solid beat in terms of wages data and jobs much stronger than expected. You would have expected a different price action in the overall market, but you didn't get it, and here's why.
Oh, sorry.
The relief rally in regional banks, which bled into other banks, which bled into the rest of the economy, overtook. Not only Apple's earnings helped, right? Remember, Apple's in 3 of the 4 major indices, and that being up, $8.40 is significant for a Friday and for the end of the week and for a relief rally that was already happening in financials overnight. So I think you've got really good fundamentals, but that economic data lying out there, Oliver, that on itself, that in its own silo is worrisome. And if you're Jerome Powell and if you're the Fed. Now, that being said, the relief rally here is real, and every sector in the S&P 500 is higher, and not by a little bit, Oliver. It's up by a lot.
I mean,
and now
especially if today closes anywhere near the top here,
to the Russell
might have a big,
in terms of its percentage gain around the day.
Early next week.
And you mentioned the ARC fund and its strength. So
I don't know if it'll break these highs,
now
though.
coming back
that would
as
be
well.
something.
Yeah, this is an impressive day, and I'm not sure it's a day that traders thought might happen. I mean, who saw VIX down back below 17 by the end of today? There is some big percentage moves in this market to end a week. Pretty incredible, actually. A head shaker.
Yeah. Apple really moving here, 5%, but the regional banks getting a relief bounce too.
I was going to keep going.
It's not the highlight to me because just the last week has been such carnage in this group, but I do think it's an important part of our discussion. Take us through what's happening here, Caroline, because I know that part of it, at least today, is coming from one analyst team basically at JP Morgan, interestingly enough, a buyer of regional banks lately.
Yeah, we saw JP Morgan analysts upgrade a few of the banks, but even some of the banks that weren't upgraded
buy them,
still
and then they upgrade
today. PacWest up more than 80%, Western Alliance up 45%, Comerica up 17%. I always like to look at M&T and KeyCorp because they're Buffalo-based, my hometown. They're both rallying today as well. But yes, let's talk about that upgrade from JP Morgan. Upgraded Western Alliance and Comerica to overweight from neutral, has a $46 price target on each of them. Meanwhile, Zion, he upgraded to overweight from underweight with a $29 price target. says there are too many on one side of the boat, noting intense short selling and just intense selling pressure overall, despite Q1 results being not as bad as expected in terms of deposit outflows. Says with sentiment this negative, in our view,
Looking
it won't
back
take
and saying,
much to
why
see
didn't
a
I do that?
significant intermediate-term favorable re-rating of regional
I hate that.
bank stocks.
Saw it coming. I even
So
marked it
we're
on my
obviously
thing.
seeing, you know, the
Didn't even do
selling
it.
pressure ease today. These companies are all, these regional banks are all still lower on the week, but definitely getting a break from the selling today. I will note for Western Alliance, at this point, all but one analyst on Wall Street has a buy rating on shares, whereas a bit more mixed for Zion and Comerica. Zion, they're pretty evenly split between buy and hold, and Comerica, a few more buys than holds at this point, despite some really steep declines. But yeah, the regional banks giving the Russell a boost. I want to check because everything but the NASDAQ was still negative on the week last I checked. Russell inching closer to the unchanged line, only down about 0.4% this week, which is pretty impressive. You wouldn't have guessed that earlier in the week, that it was going to make quite a comeback.
Yeah, it's definitely you know, a nice little bounce. It's a step in the right direction. I mean, anytime you got some of these stocks up, you know, 80 to 100%, it's a little bit more than just kind of a, you know, a dead cat bounce, as they call it, hopefully. But is it you know, changing the weekly chart? Tougher to say. Probably not, it seems like. What do you make of it, Kevin, as a trader? Is this still a minefield?
Sure, there's still headline risk, Oliver. I mean, you have to think, you know, we thought, Jamie Dimon told us, he thought you know, First Republic being bought out was the end of the banking crisis. He thought that this was going to dissipate. It clearly didn't. Now, you can make a case, maybe some of this was ill-reported or reported wrongly, but headlines are still going to be out there. You still got to, traders will love the price activity today, but you're also going to keep one eye on the headlines over the weekend for any
on the weekend?
Other signs of new weak players
In like
and any
barbecue?
price action that whistle that things aren't great.
Bags full of
in some
barbecue,
regional
that's
banks.
right.
And then there's, you're going to have a Berkshire Hathaway meeting over the weekend. Charlie Munger's probably going to speak about real estate and commercial real estate and some potential weakness there.
Big
He's
sell
on
off from
record
the
as
market.
saying
What's up?
could be problems there, so you got to watch for that headline over the weekend. But Oliver, this is still a good end to the trading week, even though, like Caroline mentioned, we're just getting back to really unchanged on the week.
Yep.
This is not
Getting
going to be
back up to where we were.
a big, you know, bull flag going to the upside here. We're getting back to unchanged.
Yeah. You know, as we look at the way the market's trading, it seems like they are able to find this like dream Goldilocks scenario of, you know, a big enough threat to where the Fed can't hike right now, but then not a big enough breakdown in the economy for us to avoid the soft landing. Bullard says maybe we can get the soft landing. And we're buying up a bunch of the stuff today that was left for dead, like Carvana and stuff. And we talked about some of these this morning, Caroline, but a few of them do stand out as like pretty extreme moves.
Well, I think Apple, of course, was the big focus today in terms of earnings. That's up 5%,
They had
as
earnings.
we said. But yeah, we
Come
can't
on.
ignore the fact DraftKings up 17%.
Well, no, yeah, huge breakout
Carvana
there.
up 25%. And DraftKings was up that much, or is up that much, despite mixed results. But it's all about that boosted outlook. So, you know, just kind of running through those numbers, reported a loss of 87 cents per share, narrower than the year-ago period, but still a little bit steeper than analysts were expecting. Revenue, though, rose 85%. Monthly unique payers came in at 2.8 million, and the revenue per monthly unique payer came in at about $92. That's up from $67 in the year-ago period. But that boosted full-year outlook is thanks to strong launches in Ohio and Massachusetts, customer retention and market share wins. So they're now projecting full-year revenue of between $3.14 and $3.24 billion. The prior range was $2.85 to $3.05 billion. So definitely getting rewarded for that on the street. I saw a Needham analyst out with a note today saying that DraftKings is continuing to provide encouraging data
little
points
volume
for the
spike there
future
on GME.
of profitability, future
Group 'em up.
profitability of the enterprise, because I think it's important to note both of these companies still
The
obviously
cows?
losing money. Just quickly, in terms of Carvana, the online used car seller, actually
Two cows.
pre-recorded in March, but outlook here is what's really
UCX?
driving shares higher today, because it said it's expected to achieve positive adjusted profit in the current quarter, which is sooner than expected. But
Monday?
just running through those numbers, reported a smaller than expected quarterly
Nice
loss
looking chart,
on
but you
lower revenue.
got earnings
Actually,
coming up.
revenue fell 25% to $2.61 billion, but still managed to beat. They're continuing to cut down on inventory and try to reduce spending in areas
SMX
like
still going
advertising.
35%.
I think it's really what analysts are really focused on is that positive adjusted profit in the current quarter. Now, you know, we pointed this out earlier this morning. Adjusted profit is just stripping out one-time items, but it doesn't seem like Wall Street really cares all that much about it. And Piper Sandler, only one of 4 buy ratings on the street, but remaining constructive, saying the company is coming back from the brink, and if recent trends continue, there's ample room for more upside, and in this analyst's mind, about $21 price target. So Carvana currently trading still below $10 a share. This is a stock in his mind that could more than double.
All right. So we are back in the mode, buying up Carvana, hoping dreams come true. Bullish behavior like we haven't seen in some time. Fun way to end the week. Thanks, guys. Caroline Woods, Kevin Hanks. Let's talk about whether or not the dream's going to come true for those rate cuts priced in later this year. Jesse Wheeler is economic analyst at the Morning Consult. Jesse, thanks for being here this afternoon. Welcome to the show. What is the possibility here that this market gets the seemingly dream Goldilocks scenario we're looking at, where the Fed doesn't have to hike, we get the soft landing, inflation comes down? There's a lot of stuff that maybe even includes interest rate cuts later this year. Is that possible? We get all those things?
I mean, it's possible. I mean, right now we're looking at this real disconnect between, you know, market pricing for the future trajectory of interest rates and what the Fed's out here is saying. You know, the Fed just came out and they maintained that they're going to hold rates elevated through the end of the year. Inflation, you know, remains pretty stubborn. The labor market, as we just
gotta wait
saw
all
this
day
morning,
sometimes.
is still very strong.
Sometimes it never even happens until after
the
hours.
market is expecting them to potentially cut, so it's, you know, it's kind of a
30 next week?
paradox.
Yeah, I can see that.
Yeah, it'll be interesting to see, you know, kind of who's right and where, you know, how and where we close that gap between the markets and the Fed.
Does it make any sense?
It makes some sense.
The cuts?
I'd say, you know, if you're a smart investor, you know, you'd be wise to not necessarily bet against the Fed.
Yeah.
You know, but yet here we are.
And that's exactly what the market's doing. And every time they've done it the last year and a half, Fed has always followed through with what they've said.
Yeah, that's right. They just opened the door potentially for a pause in June.
SMX,
but then we get this,
36%.
you know, blockbuster jobs
Kind of miss
report.
trading this one though, even though
There's still going
huge
to be,
spreads
you know,
and
a few
all
more
that.
big prints coming out
Big moves
before
on it.
policy makes their decision in June, including another labor report and a few inflation prints. So, you know, the jury's still out. But, you know, here we are talking about whether or not, you know, they're going to pause or potentially, you know, hike again. But, you know, the market is out here saying, you know, completely priced out any additional rate hikes, or at least had until yesterday. And we're talking about whether or not, you know, they're going to cut as soon as September.
The economic deterioration that's needed to get us to
Max
cuts.
38%.
How extreme? Are the banks going to do it alone? Because I hear all this talk about how credit conditions are going to tighten up.
Maybe I'll wait till
because the
Monday.
regional
Might
banks.
have a little
I'm looking
gap
around,
down.
I don't see it. I see a stock market on its way back to all-time
drop and
highs.
rally.
And credit spreads, unless I miss something, they're not doing anything exciting. Anything worrisome, are they?
I think there's some signs of a kind of slow credit crunch here. You know, some of the small business owners are finding a little bit harder to borrow. Their spreads are a little bit higher, but, you know, nothing too big. And as you mentioned, you know, we're seeing this kind of risk-on appetite this morning. So I think that the worries there about the broader financial sector instability, you know, potentially looking at, you know, this fiscal cliff, you know, coming up next month, like those are all reasons for
over 2% today on the high.
policymakers of the Fed to potentially, you know, hold and like, let's see
16
how
and
these
17 cent
rates
gap looks
that we've already put in place, how this aggressive rate hiking cycle is going to impact
19. It's actually
the economy before we continue to tighten.
That one.
But at the same time, you know, it's a very data dependent Fed, as they've said numerous times, and if the data continues to come in hot, then we would expect the Fed to do as they say and remain, you know, fairly hawkish.
What do you make of the data sets we got this week for kind of like secondary inflation data? I mentioned some at the top of the show with ISM prices paid and unit labor costs. And then today with the wages number and NFP with CPI next week, should that put us on alert for something a little bit more warm there?
I would think so. The wage growth, especially that we saw come in today, if we were looking at that average hourly earnings figure, which accompanies the jobs report, they had been softening over the last several months, at least going in the direction that Fed policymakers would want to see. However, it came in super hot today, 0.5%,
and it's waking back up.
6% annualized. This is the fastest pace we've seen in a year. This will be a real concern.
This close might be so bullish.
Wages, of course, the largest input
might
cost.
Not get an exit
those
after
numbers
hours
just
or on
aren't
Sunday.
Consistent with the Fed's policy target and aren't necessarily consistent with it even moving directionally the way they want to go now.
And when do you think we should have our calendars marked for like when we'll know, if we're plateauing for inflation? Is there a timeline that you think might be reasonable that we should be able to say, okay, we're going to keep cooling off. We don't need to jack up rates anymore? Is that like a 3, 6, 12 month?
So I think the real thing to watch here, and this is what the Fed's watching, is that core PCE figure. And while it had been slowing for some time, it's kind of just trending sideways for the most part at this point by a lot of the ways you can cut up the data. And that'll be okay potentially for 1 or 2 months of pauses, but it's certainly not going to give the Fed any reason to potentially cut unless something really kind of disastrous comes out.
The list uploaded to Reddit, which shows the shareholders
segment where it's like, what is the market really pricing
recently, or what came out this morning?
Is it some sort of shock to the system?
Okay. Thanks for the convo, Jesse. Good stuff. We'll certainly be in touch.
Thank you.
Absolutely. Jesse Wheeler, economic analyst at the Morning Consult. Let's come back and talk some earnings as we go into the fintech space with Dan Delev. Looking at Block, Coinbase, SoFi after earnings, a bit of a mixed bag. Coinbase had a nice little relief rally going on throughout the day. It's held on to it. Block, on the other hand, faded down a little bit.
19 minutes ago. No move on the stock from it. RC on there. Adam Cochran is bullish on barbecue. Interesting. He's not anybody crazy, but brings up good points. Good ways they could make money if a buyer was involved. I just shared his tweet thread on Discord. Oh my gosh. RC did the interview over the counter. What other German interview have you seen done over the counter? Stop. Barbecue bounced back up the VWAP by consolidating up here. MACD's now bearish. Right under the 9. We'll see. See if it starts to give up some supports. About 30 minutes left. Actually, do a video. I do. Share it on Discord. I love it's already on there. I haven't checked yet. We're up 782 million shares. FRCB, is it ripping? 11%? That is neat. Poland street name, 770 million. I'm gonna have to see this right up that you guys are saying. Barbecued a little pop, back up to 12.13, top of this little range. I might have to up my my buy. Doesn't look like we're gonna be getting down to 1080 today. Again. Seed & Co. fast account address and file common stock 776 million. So is that outstanding, or is that the float, or what is that exactly? Because since they pulled the S1, I thought the outstanding, the float was probably closer to this 465 million. One share for $8 billion.
Done, despite the fact that the compare
shares and street name. So confirming naked shorts because the float's not that big.
Firing on all cylinders, right?
All right.
I mean, they basically they keep on accelerating. The adoption of the card is amazing, so they're doing really well. And EBITDA, of course, is kind of out off the charts. What hurts the stock today, in my view, is just the aftermath of Hindenburg, which went after them. It's extremely complicated to understand the results. They have like a communication problem more than they have a fundamental problem. And I think if you're like a long-only portfolio manager,
we're trying. It's like it's such a mess every quarter, trying to figure out what exactly they're saying and where the numbers are.
I agree. I agree. And I don't understand how they just don't get it, because that, to me, this is like, we actually wrote it in the note today, right? What they need to do is basically, just get their act together and tell the story in a simpler way, so that someone in a long only, on the long only side looks at it and says, okay, this is easy. I get it. It's the next JP Morgan. I understand it. I want to buy it. But they're making it almost hard for you to want to own it because it's so complicated. Right? We still haven't finished our model. It takes forever to do if you want to do it right. And I think that's the story with Square. It's very unfortunate to see it come down to it. We're getting a lot of questions on it.
What do you think is, what's the most common question you get, and what would be something low hanging for them that they could describe differently or report differently in your mind? We got about a minute.
Most common question is,
yeah, you guys haven't shared on
business
Discord.
is like,
what
are they
came out?
able to compete
I'm looking for it. I can't see
with
anything.
Toast and Clover, right? So Clover, owned by Fiserv, amazing job.
Yeah.
Frank Bisignano is like the man. Toast is really gained momentum in the restaurant point of sale. What can Square do to basically regain that momentum and not grow slower than Toast and Clover? That's the number one question we're getting. What they can do simpler is basically give you a clean growth number. Now it's like including buy now, pay later.
782 shares total.
God knows what's going on. Give me a clean growth number so I can model it the right way.
Okay. All right. Thanks, Dan. Good to catch up. Appreciate it.
Cinco is a street name for shares held in the DTC on behalf of shareholders and brokerages.
Relief rally, but to Dan's point there, maybe a shifting trader in the crypto world that ultimately is going to come back to bite Coinbase later on as regulators crack down in the altcoin world. All right, coming up, let's trade some options. It's all bullish across the board. Of course, how can it not be? Tom's found a bunch of call buyers from General Motors to Apple and Lucid. Be right back.
Yeah, I mean, that's basically what that's confirming, right? I don't know. I have to look through it. It's oh, it's literally just people's names. What the heck? Common stock. List of equity security holders. It's just a list of people's names and how many shares? What in the world? Yeah, I'm not on there. No happy money. So these are, you guys are saying these are DRS? This list is insane. And the share counts are pathetic. I mean, not all of them, but are these just individuals that DRS? Address on file, common stock. And who individually counted all these? Sell is right there, 12.15. Same resistance as before. That's why there's a line there. Sell wall size? I don't know. I don't get L2 on here. On OTC. I mean, it's a huge spread, gapping all over the place. So we're at 12 cents. It's up 13% today. Green close would be great. Above 10.30, even better. I think is needed. Hype. Buy Please come down. $6.80? No, I don't have any that low. I've got ones for, I don't know, here. Bottom of this range, 1080. And then keeps coming down. I'll pick up more at 1030. And I'll pick up more at 835 or so. But I don't think we're coming down. I think a 1080 pickup I'd be pretty happy with. But we'll see. Still have about 30 minutes left. I did close shares. I did the same thing I did yesterday. I closed shares and then bought back in a dip. So it was a little more difficult today because the range was not as big. Yesterday was nice because we had, you know, nice big double top as head of resistance. Today was not quite as obvious. It's just a little double top here. And it was pretty soon after we opened, so it was hard to know the direction. So I guess I got kind of lucky on that one. And then my dip buy was pretty late on. I didn't buy till like here. So didn't get the bottom today, but that's okay. And I've basically positioned out though. I don't have as much over the weekend. I have about half what I had coming into today. But it's nice. It's up like 8%, so that's cool. I can't trade extended hours either on OTC. So far, extended hours have only been good times to sell because it's basically just rallied in extended hours. Okay, I need to do the video. I'll look at the filings and stuff. I don't know. I guess it's just a huge list of people's names. We'll figure that out. But thanks so much for the support, guys. Thanks for watching today. We've got 2 likes. Well done. Well done. Appreciate it. Thanks, Ace Ventura, for all the gifted memberships today. Jump on our Discord if you guys became a member, especially. Linked in the chat. DM me and I'll give you the role. Happy crew. Dump back to 10. Not without news. Well, 10. Yeah, 10:30. I think we could hit 10:30. Mega bottom. Stop it, Mr. Style. I think we could hit 10:30, but it's not looking too likely. Maybe on a dip on Monday, but this thing is pretty bullish. I mean, lower highs or higher lows, higher highs. We've got. I'll go over it in the recap video. You guys can watch it. Thanks, Lord. Thanks, Kitty. Thanks, Mister. Thanks, Dixon. Ace. Happy Friday, guys. Have a good weekend. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at HappyMoneyYT, as well as our Discord server. If you guys want to chat, a little Twitter Spaces this weekend, follow me on Twitter, hit me up, DM me on Discord, let me know. You can co-host, and we can go over whatever. And yeah, be good this weekend. We'll see you in the premiere of the video. Be out in like 30-something minutes. And yeah, have a good weekend. Thanks, Zumi. Thanks, Lords. Good one, Kitty Daddy.